This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Sweeney continuing out west. The Grizz is in Steamboat. It's Jeremiah Johnson. He's out there he's got the big buffalo skin on, and he's,
Really?
going down expert.
Snowboards or skiing, you think?
Oh, no, skiing.
Skiing, right. He's proper.
Snowboard. He's proper. We say good morning to Mr. Sweeney, no doubt listening out on Apple CarPlay, Sirius XM, Channel 121. You know that voice. Gura fired. Sassower in. Somebody said, this is brilliant. David Gura, then Damian. Tom, why don't you take the day off and have Gura and Sassower do the show? That's actually a brilliant
it'd be very
idea.
stiff.
I want to get to you in a moment. I get some knitting out of the way, but it's really, frankly, folks, it's a huge day in the world of Damian Sassower. We've got a great lineup to talk about this. I learned moments ago, Angela Stent, the true expert on Mr. Putin, she will join us. Professor Stent in the 9 o'clock hour from Washington. Really looking forward to that. This morning on this day of PPI, Bloomberg Surveillance. Brought to you by, we're brought to you by IBKR. Well, the percentage of the U.S. experiencing drought conditions will exceed 18% on February 18th, 2025. At IBKR Forecast Trader, the yes was recently at 35%. What's your take? Trade your drought conditions forecast. Trade your prediction at ibkr.com/forecast. Damian, I'm going to go to you right now because Seema Shaw's waiting, and we really want to get to her.
We don't want to keep her waiting, yeah.
This is a huge day for Vietnam, for Indonesia, over to Europe, for the Mediterranean. Explain the EM world when they look at the threat of reciprocal tariffs, which harken back to the Tariff Act of 1930.
Well, yeah, you mentioned Vietnam. It's amazing how they've really risen up the ranks in terms of their trade flow with the U.S. They're the top 7 country now. It's pretty unbelievable. But, it's all about Mexico. It's all about Canada. And quite frankly, it's all about the European Union here. And if you look at currencies, if you're going to look for signaling as to how the market's digesting these reciprocal tariffs,
right?
My God, the dollar bears are back in focus here. Nearly every currency in the G10, with the exception of the pound, is up versus the dollar. The Bloomberg Dollar Index, Tom, has had a full 160 basis point reversal over the last 30 trading days alone.
Off your remit, but do you just assume this will dampen global growth when we see not traditional tariffs, but something more onerous?
We're going to have Seema in a second. She's going to tell you that U.S. GDP growth is expected to come off about 120 basis points on an annual basis.
1.2 percentage points.
1.2%.
Yeah.
Very good, Tom. Very good. Due to the tariffs. And so, look.
Flunked it on my admissions exam, the Lehman.
Of course. So look, I'm not going to argue with Seema. She's, and she's right. But the reality is the currency markets are telling you front and center that, these central banks, these emerging markets can handle it. And if you look at your favorite Asian economy, the Philippines, just overnight, guess what? They're finding religion. They did not cut rates. They remained on hold at 5.5%.
Damian Sassower with us for the next 3 hours on this important day of trade politics. Professor Schiller later. Right now, from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Yes, hi from that. We also have more inflation data out today. We have PPI up at 8:30 Wall Street time. Ahead of that right now, we still have futures, little movement. We have NASDAQ futures up about 15 points, Dow futures up about 30, S&P futures little change, down just a point. We have the 2-year yield 4.34%, down 1 basis point. The yield on the 10-year 4.59%, and that's down 2 basis points. European stocks climbing, optimism about a possible end to the Ukraine war. So we have the DAX in Germany right now up 1.5%. Also, the CAC in Paris up more than 1%. We go to the euro up 0.1%, 103.97 against the dollar. And the Bloomberg Dollar Spot Index is little changed. Want to take you to shares of Barclays. They fell the most in 6 6 months. That's after the bank left its earning guidance for the next year unchanged. So shares down 5% in London. Then we go to Deere. It maintained its outlook during this farming slump, but just wasn't enough for investors. The shares are down more than 4%. And also earnings coming in for GE Healthcare up nearly 1%. 2025 adjusted EPS in line with estimates. And finally, PG&E up nearly 1%. Boosted adjusted core earnings per share forecast for 2025. That is your Bloomberg Business Flash. Over to you, Damian and Tom.
Lisa, thanks so much. This is just perfectly timed to have Seema Shah with us with her work at the London School of Economics. There was EC 338 International Trade, which she wandered through years ago, and it's a perfect day to talk to her about global trade and the shock we're going to see with reciprocal benefits. Seema Shah is with Principal Global Investors. Seema, to me, this is a huge tip point. Going back to GATT, going back to Uruguay, going back to WTO, what if we go tit for tat with Vietnam? What will that do to global growth?
Hey, Tom, great to be with you. So I was listening before, and I could hear the kind of about the impact on U.S. growth, global growth. So look, I think the numbers that are being thrown out there, including our own, with for the U.S., for example, the 1.2% subtraction to U.S. growth, that is your worst case scenario, right? It doesn't take into account any of the currency movements. It doesn't take into account reciprocation and maybe how the U.S. responds to that. And of course, it doesn't take into consideration any substitutions that may take place. What we do know, just from studying Trump 1.0, is that tariffs, of course, it's never a positive for globalization. It's never positive for global growth. What it also does is it weighs on global capex. And I think that's one of the key things here is, we make an announcement today, but how long it stays, what else, is it going to be increased at some point? That kind of uncertainty is really what does weigh on global capex, and that's what actually can be more damaging.
This is going to be an interesting day, folks, and we're not going to get too mathy. We can do that with Seema. We can do that with Damian. But Seema, I'm going to suggest that from a blended ultra-low tariff structure of 40 years of United States work, 2 or 3% all-in tariff, which is remarkable. And as we move higher with Trump tariffs, and particularly these tit-for-tat reciprocal tariffs, do you have in your head where the tip point is? Is the tip point a blended 5% tariff, or is it something more dramatic for the media, like a 20% tariff?
I do think it's something more drastic. Damon was just saying, I think a lot of the EM countries, they are in a better position than we've seen in previous times. So of course, they're still reliant on that trade story, and Vietnam in particular has really benefited from some of the adjustments in supply chains away from China to other parts of Asia. But these countries are in a much, much stronger position. So I do think that tipping point is that much higher. And remember as well that at least the starting point for global growth is pretty sturdy. That's going to be a really important thing to keep in mind as we start to think about how global growth is going to be impacted. Look, it is negative. We don't want to kind of pretend that there's no impact. But in terms of how far the world has come, I think that there's a lot of productivity gains to be had. And of course, don't forget about technology and the impact that can have in helping a lot of these countries forward.
Seema, it's nearly baseball season. Bregman to the Bo Sox. And my question for you is a simple one. What inning are we in? I mean, most argue we're late in the business cycle, but a case can be made that we're early or even mid-cycle. In your opinion, what inning is the global economy in?
Well, we have this question going through our minds all the time. A lot of our models are showing us, of course, that we're in the late stage of the business cycle, but we have been in that late stage for a really, really long time, which has raised a question: have we kind of missed the end, and are we already into the new beginnings? I think where we are today, though, is knowing that it's unlikely that any of these central banks are really going to try and go back to the era of really, really low interest rates means that you probably are back into some kind of business cycle stage where you could get some kind of downturn. Now, for 2025, we're not expecting any kind of recession. We're not expecting an end to the business cycle. But once you get into 2026, and presuming that interest rates in a lot of parts of the world, particularly in the US, does stay fairly strong, then I think things do get a little bit more challenging. Though I guess the caveat to this, or at least the hesitation from my side, is, economists they are notorious for always kicking the can down the road. When is your forecast? You keep pushing it back. But I think that as we start to see how the stars are aligning with globalization, taking a step back, with central banks keeping rates fairly high, and of course, from a fiscal side, governments starting to be really, really challenged about what they do on that agenda, then I think 2026 is probably the time when you start to see a more difficult economic environment.
Seema, the Fed is keeping rates higher for longer. But, one thing that I think everyone's universally been in agreement, at least the markets have, is you have this asymmetry, right? Where the next move is widely expected to be a cut, not a hike. I'm just curious what your thoughts are on that. I mean, do we really think that if inflation continues to tick higher, I mean, we see the import prices come in tomorrow with retail sales and IP and all that. But I mean, we just had a CPI print. We have another PPI print coming in. I mean, if inflation continues to creep higher here, at what point do the forward market start to price in Fed hikes?
I actually don't think it's too long before the market starts to really panic and start talking about hikes. I actually think that for the Fed, the hurdle is pretty high. Remember that this time last year, we had the same kind of inflation scare. We went through January, February, March with 3 hot inflation prints. The market started to price further additional interest rate hikes. Then it came to April, and then you saw this downside surprise. So I think that the Fed is going to be somewhat wary of being wrong-footed, and arguably they have been wrong-footed several times in the last year or so in terms of policy moves. So I think they are going to be a little bit more cautious.
I got 8 more questions, but Damian's fired up. Folks, across the nation on the morning commute, Apple CarPlay, SiriusXM. Thank you, SiriusXM channel 121, for your attendance. Android, Google Android, I should say. Android?
Google Android.
Can't remember
Samsung,
right now.
Apples.
I'm so rattled by Alex Bregman, I can't think this morning. We say good morning out on YouTube. Neil Mohan out there with an annual letter yesterday on the success of his platform. We are thrilled to be part of this YouTube experiment. It's building every day. Go to Bloomberg Podcasts, and he talks a lot about podcasts in his note. Out at YouTube, subscribe to Bloomberg Podcasts, and that keeps us going. Even Damian Sassower in the morning. I think Seema's great here. I mean, it's a huge day.
Yeah, no, and I think, what for me is the key point. If we talk about central banks outside of the Fed's remit, and we talk about emerging market central banks in specific, they're sitting on a much larger reserve base, which is good for their economies from a creditworthiness perspective. But more importantly, it seems that these central banks are finding a bit of religion here, Tom. They are not cutting rates in the face of a Fed on hold, rates higher for longer, and that is supporting their currencies, and that can very well offset some of the negative vibes from these tariffs.
Seema, help me here with the shock and the condition that we're seeing at the White House. Peter Navarro has been driving forward reciprocal tariffs.
Yep.
How far are we removed from the global trade bargain of World War II and of George Bush Sr.?
So before I just want to respond to something that David said about the emerging markets, because one thing that we have seen in the last couple of years is that, if anything, EM central banks have been a lot more level-headed and have actually got the forecast correct in how to respond. So I think that is something that to keep in mind for EM, is that they are not going to be knee-jerk reactions. So that is a clear positive. With regards to the reciprocal tariffs, look, I do think over the coming months, governments, you can hear this, see this coming up from India already, that they're already lining up to maybe reduce their tariffs to avoid any kind of reciprocation. So we could be getting to a point that, yes, in the near term, you do have the step back from globalization tariffs coming up. But maybe in the end, you're going to get to a point where actually there is a kind of a broader scene where tariffs around the world are coming down in order to avoid that kind of action from the US.
Seema, I'm looking at, the FX performance across the board, emerging markets in specific year to date. Brazilian real leading all players, up 7.2% on a spot basis year to date. But my goodness, look at gold. Gold is up double digits year to date, right? And so, a lot of people look at gold as sort of a pseudo currency, sort of a store of value. What are your thoughts on gold here?
I mean, it's just been on a wondrous move, and it's been interesting because actually a lot of the relationships that you typically consider with gold with regards to the dollar, with regards to interest rates, hasn't been really coming through. Now, I think that makes it more difficult to try and analyze how does this move forward. But I think one thing that we are seeing is that investors are taking a closer look at what could be those safe havens. Look, they want to have that allocation. It's not like they're moving entirely into complete safe havens, but they want to have something in their portfolios which can provide that bit of reassurance that if all hell breaks loose, if tariffs really start to increase, if inflation starts to rise in a number of different countries, that they can rely on that one asset. And I think gold is certainly performing that, and that has been an interest to investors.
What about central banks? What about China? I mean, China has sold off its position in U.S. Treasuries over the last 2 years, has declined by something on the order of $300 billion, Seema, and they're buying gold with that. And so, my question is just how much ammunition is the PBOC providing to the price of gold right now, and can it last?
Well, so that's been one of the factors which has at least supported gold prices over the last couple of years. And, you can see something similar from India. India's always been a kind of a major buyer, but you've seen that support continuing to grow. And I guess, as maybe if the US-China relationship continues to deteriorate, you may see that continuation.
Right.
But actually, from my perspective, the thing that we're expecting is that the kind of the Trump showdown probably means that you could even get to a position where China, US have got a better relationship. And then maybe at some point the PBOC starts to step back. So I think that there's a lot of the relationship, a lot of the dynamics that we've become accustomed to over the last couple of years, which are increasingly in question. Of course, it does make a really difficult trading environment for investors.
Thank you, Seema. Seema Shah with us, the principal, and Damian Sassower with us for the whole show today. I can't say enough, folks, how important this is if we institute reciprocal tariffs. I want to make clear, folks, this is radically different than saying we're going to put a 10% tariff on everybody. This is really getting granular in looking at the reciprocity country to country and adapting to that. That is what the president has suggested in a tweet over the last hour. Mixed screen here with PPI at 8:30, futures at -6. With our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, Lisa. About 75,000 federal employees signed up for a voluntary resignation program inspired by President Donald Trump's billionaire efficiency czar, Elon Musk. However, that falls short of the numbers the White House hoped for and increasing the likelihood of deeper mass firings. It makes up about 3% of the 2.4 million civilian federal workforce. The goal was at least 5%. Musk, speaking by video call at the annual World Government Summit in the United Arab Emirates, is standing by his decision to cut and limit federal agencies.
There's roughly 450 federal agencies of one kind or another. That's more agencies. That's almost an average of 2 agencies per year since the formation of the United States. So, how many agencies do you really need to run a country? 99? Not 450, that's for sure.
The resignation program, known as Fork in the Road, closed after a federal judge lifted his order freezing the program. President Donald Trump says he and Russian leader Vladimir Putin have agreed to begin negotiations on ending the war in Ukraine. He also said he later spoke with Ukrainian President Volodymyr Zelensky.
I think we're on the way to getting peace. I think President Putin wants peace and President Zelensky wants peace.
President Trump also said any peace deal would include keeping Ukraine from joining NATO. We're learning more about a car that plowed into a group of people in Munich, Germany today. The Bavarian state governor says the driver was an Afghan asylum seeker. About 20 people have been injured, 2 of them seriously. Several children are among the injured. The car drove into a demonstration organized by a labor union. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
I thought we'd come in today and just talk about how the Detroit Tigers are stacked. It's amazing. We did pitchers and catchers, wore the jacket yesterday. Today's just another day at the races, except it's not. The gentleman from Houston
stole the man from us.
He's house looking outside Boston now.
Stole the man, Mr. Bregman. I thought, hey, he's going to come to Detroit. We got this locked up.
Damian, third base versus second base. He's a third, and he's going over to play. In the shadow of the late, great Jerry Remy.
Stole the man.
I'm not surprised. Look, we heard that the Tigers and the Blue Jays and the Cubs were all over Bregman. But, at the end of the day, if you're looking at the numbers here, apparently the Boston Red Sox were offering something on the order of $10 million per year more.
I saw that.
Than the next biggest. So, look, they were all in. And, look, I love Bregman. I wish he went to the Yankees. But, it's going to be interesting to watch the AL East with Bregman in that 3-hole in Boston.
Don't you guys already have an all-star third baseman?
Yeah, I think we're working on that right now.
Yeah.
The infield's getting very foolish. But I don't know.
Well, Bregman's right-handed bat at Fenway Park, man. I mean, he's got a pretty good track record of success
I went
there.
up and did, with Seth Maganar, I went up and did the CFO show. And the basic idea, the general manager walked by me and waved, and great, a lot of emotion. And the bottom line is they haven't spent a lot of money. They've not been in the game. You know, they're the Los Angeles Angels of the East Coast.
I mean, I think
this year is different.
It's hard to compete with the Dodgers on the money game these days. I mean, even the Yankees can't do it. And the Mets, too. I mean, look, the Mets are trying. But, I mean,
How do the Yankees look? I mean, the Mets got Soto. I get it. Steve Cohen.
Yeah.
The Yankees, to me?
I think they look okay. You know, I mean, look, it's tough to, losing Soto is going to be tough. But, they've definitely replaced him in more ways than one. The pitching staff looks awesome.
Do you lose more money in your rotisserie baseball or rotisserie football?
I lose more money on the golf course, which means I'm up on the air because it's winter. And I haven't been out there lately. So yeah, no. But, we got the Genesis Invitational, the PGA, coming up I think today. Today is the first day, $20 million purse there.
We'll get a report on that from Damian here in a moment. We welcome all of you, particularly 92.9 FM in Boston and Houston. Good morning as you listen to us on Sirius XM and, of course, all of our digital platforms. I just put this out on YouTube. I'm trying to get it on LinkedIn right now. Neil Mohan, major shout out at YouTube. He just put out his annual letter at YouTube, and we're just thrilled to be part of this incredible digital experience. I'm learning about it each and every day. No one's dumber than me on it. And just thank you for subscribing at Bloomberg Podcasts as we drive this forward. The reason we're moving forward is Lisa's finally back. I mean, Berlin, Atlanta, it's been breathtaking. Thank God for the Gulf Stream. Red and green on the screen here, PPI at 8:30.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in futures. This is after hot inflation data yesterday increased the bets that the Federal Reserve won't have much room to cut rates this year. Today, though, we have more economic data on tap with January PPI initial jobless claims for last week. That's out in about an hour from now. So let's get to it. NASDAQ futures little chains up 5. Dow futures little chains. S&P futures down about 5. We have the 2-year yield at 4.34%, down 1 basis point. The yield on the 10-year 4.59%, and that's down 2 basis points. To commodities, oil falling. We have Brent crude down more than 1% at $74 a barrel. WTI crude $70 a barrel. But gold soaring. COMEX gold $2,946 an ounce. The Bloomberg Dollar Spot Index, that's a little change right now. A ton of earnings to get to. We'll start with Cisco Systems up 6%, a beat sales forecast for the current quarter. Then we go to Reddit. They're down 11%. Fourth quarter user growth missed estimates. Then you go to Crocs, the shoes that the kids love, my family loves. Those shares, they're up 17% this morning. Outlook for adjusted 2025 profit ahead of estimates. And finally, Molson Coors. They actually reported a profit that beat expectations. A part of that was the Lipton beer sales from outside of the U.S.
Exactly. We're front running. I got stacks of Molson Golden stacked up at home. I mean, they're just stacked up in the closet.
You got to crack them open.
Yes, I'm experienced at that.
There
Lisa,
you go.
Are you done?
Yes.
Thank you, Lisa Mateo. Great to have you back here this morning. Damian Sassower in for Paul Sweeney. Let's go right to it. Professor Schiller with us. Wendy Schiller of Brown University. Angela Stent in the 9 o'clock hour. Who is Mr. Putin going to speak to, Professor Schiller?
Is that a trick question? Okay. Could you elaborate on that question, please?
We got Putin's going to talk to Trump, and I guess he's not going to talk to Ukraine, but is it just a bilat meet and greet, or do you actually see some Ukraine negotiation here?
No, we've talked about this before. I think there's no question Trump wants to be the guy that ends this conflict.
Yes.
You know what? And so he so far he is not pressuring the Republican-controlled Congress to cut off future aid to Ukraine. But that's clearly in his sort of basket of negotiating tools with Ukraine. He's willing to give away pieces of Ukraine on Ukraine's behalf, but he also will basically tell Putin, I'll stay in this as long as we have to, right? So that's when you say who's he talking to, that's what Trump wants. And I actually think there's a pretty good chance he'll get it, because ultimately he's willing to walk away from Ukraine. And I think Zelensky knows that.
The pivot point on this, folks, is I believe 2008, Condoleezza Rice and Robert Gates in Belgrade, is sort of when we decided to extend NATO, et cetera, et cetera. Professor Schiller, how far is President Trump in his Oval Office foreign policy from traditional American foreign policy?
So, Tom, this is like a mind meld. I was just thinking this is exactly the opposite of the George Herbert Walker Bush and the George W. Bush Republican Party, which was, engage, exert influence, send troops where you need to. So this is a complete sea change. This is going back to the 1940s. This is sort of Southern conservative Democratic Party isolationism. This is, we will exert power when we need to, when it's in our interest. But otherwise, we are not going to come to the rescue of democracy. We're not going to promote it. Clearly, shutting down USAID. We're not going to do this anymore. And John Quincy Adams said this, in the 1820s. We'll be with you, but we don't have to go in search of monsters to destroy. That's how he put it. It's taking the United States into a completely different realm on foreign policy, but it's not soft power. Trump is willing to use the power. He just uses it in his interest and the United States' interest.
Professor Schiller, I want to pivot back to Ukraine here. I mean, if we have a snap election coming up in Germany in the next 2 weeks, there's a lot of polling going on. And my question for you is, if Zelensky gets, if he had the opportunity to vote in Munich, who would he be voting for? Would it be the SDP? Would it be the CDU? Would it be the AFG? I mean, talk to us about what's coming up in Germany.
Well, the Germans are facing sort of like multiple problems at once, right? We know in the economy, they have a very sort of heavily socialized, heavy tax state. They've always done well in this manufacturing sector. They've always done well internationally. That's slipping, that edge, and the capacity to support their internal welfare state is also slipping. There's also been tremendous immigration and migration to Germany. That changes the society. So you're doing the two things at once, and we know that in the United States, we're having the same themes. So, the instability in Germany could be solved by going right wing. And that will, how that bodes for Russia-German relations, I think is unclear for us at the moment. But certainly when you think about this trend all over Europe and in the United States, it doesn't bode well for those people who think we should go out and champion democracy. But sovereignty is something different. Ukraine is about sovereignty. And that's another question that you start to wonder about with, especially with President Trump saying he wants Panama, he wants Greenland, he wants Gaza. Then you think about sort of nation state sovereignty, and it gets very, very complicated.
Yeah. Wendy, I get one more question in here. We got talent in the studio here. We got to get to her. His agent's going to go mental. Wendy Schiller, Navarro wants reciprocal trade. Are we bombing ourselves back to Section 338 of the Tariff Act of 1930?
Well, we don't. Nobody wants to go back to 1930 trade policy, I think, right, Tom? I mean, you exacerbate and then cause a worldwide global depression that lasts until World War II. So I don't think anybody really wants to go back there. But we haven't seen the impact on the American industries, particularly farm, particularly import-export industries. A lot of these have not hit yet. We saw in the first Trump administration that they're expensive. When they hit, things go south. So, his poll numbers are very high now. Wait a couple of months till these things really hit and see how the economy is doing. And I do think the administration will have to modify, but probably not for a couple of months.
Wendy, thank you so much. Professor Schiller, the Taubman Center, Brown University. He usually strolls in at about 11, 12 in the morning. For some reason, Romaine Bostic is with us, of course, the star of the close, looking at mopping up the market every afternoon. Romaine, I've been totally remiss of Facebook up 18 days in a row. It's meta this, meta that. On the close, how are you reporting? What are you learning about the juggernaut that Zuckerberg invented?
Well, the juggernaut is now the entire Mag 7. If you look at the gains in the Mag 7 this year, there are no gains. If you strip out Meta, it's basically deep in the hole. Meta is basically the Mag 7.
Why? Let's start with a why.
Because AI. Tom, have you heard of AI?
Yes.
Have you used the metaverse?
No.
Okay.
Come on. Look who you're talking to.
All right. Well, people a little younger than you are really excited about this. And look, Meta's spending a lot of money on this, but they're probably one of the few companies that's actually showing some degree of return on
money
that
in
investment.
The bank. Yeah,
money in the bank. And there's some other dynamics here, too. The relationship, the supposed relationship that Mark Zuckerberg has with the Trump administration is seen as potentially favorable as well, particularly with the big AI spend coming, being pushed by the government.
Romain, Tom gets confused between the metaverse and the Marvel universe, so, we have to forgive
That's
him
okay.
here. But, overnight...
I'd like to point out, I haven't had any coffee yet. Tom literally dragged me off the street and said, get in here.
I saw he was going, Romain. I thought he was asking for a Caesar
We
salad.
don't have coffee, but we got Sanka just outside the door. Damian, one more to Romain.
Cisco reported overnight, Romain. I don't know if you caught this. I mean, the stock's up 6% on the news. And quite frankly, since we saw that big drawdown in all those AI stocks, ASML, Marvell, they've all bounced back and then some. I mean, what's to give here?
Old technology is new technology, right? You look at the rally in Cisco. You look at the recent rally in IBM. Oracle. How is Oracle at the center of new technology? Yeah. You've got this 50-year-old company run by an 80-year-old guy. No offense, Tom. 80-year-old guys can still do their jobs. But they are at the vortex right now of everything going on in AI.
You're at the vortex, too. The trap door's right over there. Romain, let me get one more in here. And I got 8 ways to go. I'm going to go CFA on here.
Uh-oh.
Are we still in Jeff deGraaf's coming up later, and he's adamant that we are not in a state of exuberance.
Oh.
On the close, are you seeing an effervescence in the market, or is it about CFA ratios and free cash flow?
It is effervescence, and it is bubblicious. And yes, you'll get a lot of people that will say, look, the fundamentals support it. Where? For the broader market? I mean, if you want to take Apple, you want to take Meta, you want to take Microsoft, sure, the fundamentals are there. But you go down to the other 450 plus companies, the fundamentals aren't there, Tom.
Lisa, can you be sure he gets a cup of Sanka on the way out?
I would love that. Yeah,
Romain Bostic.
1 cream, 2 sugars.
Okay, this is the first. Is this like a new thing for 2025?
Is this a new
coming
thing?
in here early?
Tom, this may surprise you.
Yeah.
I'm in early every day, but I walk by and I see the back of your head, and you're holding court here. You're dragging Lisa into something she doesn't want to be dragged to. Poor Damien. I don't know, Damien.
Well, her hearing is gone. Her hearing is gone from Pantera and Balloon. Romain Bostic, thank you so much. Look for the close. SFU and A Steel will also show up there this afternoon. We'll see if Meta can do it again. Red and green in the screen. What do you think of the Mag 7, Damien? I mean, it's away from your remit, but you're wired.
I'm just laughing to myself because I walked into the office earlier this week. By the way, I turned 51 on Tuesday. Thank you for the happy birthday card. But here's the thing I have to ask you. Who went into the 4th floor lighting and turned up the lights? I mean, it is so bright there. I come in pretty early and my eyes, Rich Truman, our producer here is asking why I'm talking so fast and, whatever this morning. The lights on the 4th floor. Can someone please lower the lights on the 4th floor, certainly before 5 a.m. Come on.
That's good to know. Do you know I've never been to the 4th floor?
I do know that, actually.
Damien, you talk fast every day.
A little world headquarters joke there, folks. We thank you for listening to us and watching us from our world headquarters in New York. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in futures this morning. Traders just adjusting their rate cut bets after the Consumer Price Index rose the most since August 2023 yesterday. Fed Chair Jay Powell even said the data shows that policymakers still have more work to do. But today, the focus, shifting to wholesale prices. PPI, that number comes out about an hour from now. So futures, little change. We have the yield space. The 2-year yield, 4.34%, down 1 basis point. The yield on the 10-year, 4.59%. That's down 2 basis points. To currencies, I want to point out the Bloomberg Dollar Spot Index has little change, but we go to the euro, up about 0.1% at 103.96 against the dollar. We have the British pound up 0.1% at 124.70 against the dollar. Shares of Nestle, they actually rose the most since 2009. It increased its dividend, also gave solid guidance after sales growth beat. Shares are up more than 5% in Switzerland. Then we go to Unilever. It said its revenue grew less than expected. And here's another thing. It also said it's going to demerge its ice cream business, which owns Ben & Jerry's, to kind of slim down the business. Shares are down 7%.
Why are you looking at me when you say that?
Look, just in case, it's next to the Molson Coors, the Ben & Jerry's. There you go. Hyatt down 4%. 2025 adjusted EBITDA forecast missed estimates, but who is feeling the love this morning? It is AppLovin, up 27%. Surge in quarterly trading. Also said it signed a deal to sell its mobile gaming division. That is your Bloomberg Business Flash.
Lisa Mateo, thank you so much. The newspaper scheduled here in a bit. Jeff deGraaf will join us at the top of the 8 o'clock hour. I mentioned an act ages ago, 1930, and it was sort of like, how did we get into protectionism? And it's plus or minus a year or two, 1930. It was so screwed up, given the Depression of 1929, 1930, that 3.5 years later, in June of 1934, FDR and team had to come out with the Reciprocal Tariff Act to begin to do away with the damage that was created in 1930. Joining us now on the litmus paper that guides us through this process of new tariffs, Audrey Chout-Freeman joins us, Chief G10 Foreign Exchange Strategist at Bloomberg Intelligence. Audrey, I assume it's a J curve or ambiguous. Where are we in 6 months with the U.S. dollar if we go tit for tat on reciprocal tariffs?
Hi, good morning, Tom. I think initially the cyclical impact, which is what drives FX in the near term, would be more detrimental for G10 peers than for the US dollar. We've talked about it. We know the US economy is better insulated to a potential trade war near term. But the market is very much forward thinking. And at some point, we will start to worry about structural implication that the tariff could have, and whether this whole tariff and the approach could actually accelerate the FX regionalization that we've been talking about already for the past few years. So the initial impact, I think it's hard to go against dollar upside, but we have to start thinking what happens after those 6 months.
Damian says, Damian's here taking notes, Audrey. I mean, he's like, let's go. I mean, there it is, big figure moves from Audrey.
Audrey, you are the Chief G10 Currency Strategist. You're the Global FX Team Leader at Bloomberg Intelligence, and once every 2 weeks, it's your favorite time of month. You get to go on the team call with your other fixed income strategists at Bloomberg Intelligence. And my question for you is this: why does Ira Jersey get to speak first every 2 weeks? Why am I speaking last? And why is Ira speaking first? I mean, you don't even get to speak first. What is going on here? I mean, who is running the show?
Oh, Damian, it's all about rates. So the Fed is what matters the most. And actually, even for FX, think about it. We talk a lot about tariff, and tariff, really matters. But actually, the dollar is moving less and less on those tariff headlines. Look at it today. The dollar went up and then it's back, sidelined again. And eventually, what will drive the currency market, I think, longer term, apart from the structural aspect that I just emphasized, which I think is a very valid point. But apart from that, it's all about economic growth and Fed policy expectation. That's why IRA goes first.
That is such the right answer, by the way, and I completely agree with you. So look, let's get to it, right? I mean, we've got euro dollar. I mean, I believe it's only a matter of time until we hit parity. I think you would agree with that. We've got dollar yuan showing weakness. Maybe we could see 740 at some point. But let's look at the antipodeans. I know that Tom loves that word. Let's talk at Aussie and Kiwi. We have some central bank meetings coming up on Monday and Tuesday of next week. Both of those central banks are expected to cut rates. What are your thoughts there?
I think those two currencies, I think, are still very much trading like a China proxy trade. So if you are still bearish on the Chinese economic outlook, on the Chinese cyclical headlines, it's hard to be particularly positive on the Australian dollar or on the New Zealand dollar. And I think for now, this continues to be the narrative. We have a narrative that's driven by international considerations, by the big story for China is when is China going to turn, and that has implication for the rest of the world economy. And on euro dollar, I think the window for parity on euro dollar is closing. And actually, we've been talking about potential catalysts and trigger for a rebound in euro dollar. And I kind of feel that, the headlines we've had on Ukraine, Russia in the past 24 hours are very hopeful if you want to take the other side of the euro-dollar bearish trade.
Yes, Audrey, I've got to go to you. This is off your remit, but you're so qualified with Burbeck and Montpellier to ask this. We've had this AI extravaganza in Paris, Tom McKenzie talking to Altman and the rest of it. From where you sit, Audrey Child-Friedman, why can't Europe do American-like entrepreneurial technology and AI? Why can't Europe get its act together?
Well, listen, I'm not an AI expert, but what I would say in general, in terms of business in Europe, the big problem is regulation. And I think, the first step to becoming more competitive in any field in Europe is by having less regulation in place, and that will make the market economy more dynamic. Okay. That's where the U.S. leads.
Brilliant.
One of the ways the U.S. leads.
We got to leave it there. Speaking of regulation, Audrey, I've got to go to Michael Barr because the Detroit Tigers are she's great. I mean, highly regulated. Audrey Child-Friedman there, putting up with Ira Jersey and Damian Sassower on a call once a week. Red and green on the screen here, PPI in less than an hour. With our news in New York City, Michael Barr.
Tom, Damian, Lisa, today is the big one, reciprocal tariffs. President Trump posted that on Truth Social this morning as he gets ready to meet with Indian Prime Minister Narendra Modi at the White House. Bloomberg's David Gura has more.
He's been teasing this for some time, and this is something that India is watching very closely as well. India does have tariffs on U.S. exports, and we'll see sort of what happens there. We've been waiting to see more details on all of these trade policies, of course, but he has, again, teased this reciprocal trade policy for a few days now.
Bloomberg's David Gura. The president and prime minister are set to meet this afternoon at the White House. Press Secretary Caroline Leavitt says she expects Trump to announce the tariffs before the visit. Defense Secretary Pete Hegseth is in Brussels today to give remarks at his first NATO defense minister session. The topic, the ongoing war in Ukraine and the spending needed from the alliance to keep the fight going. Hegseth called on other countries to increase their defense spending for NATO.
But when it comes to defense spending, even 2% of GDP is not enough. 3 and 4, and ultimately, as President Trump has said, 5% of defense spending is critical.
Meanwhile, President Trump said that he spoke with Vladimir Putin to secure peace in Ukraine. A federal judge has removed a key legal challenge in the way of President Trump's plan to downsize the federal workforce with a deferred resignation program. It was a significant legal victory for Trump. The judge found that the labor unions that sued did not have legal standing to challenge the program commonly described as a buyout. A driver drove a car into a union demonstration in central Munich, injuring at least 28 people, including children. Authorities said it was believed to be an attack, and the suspect was arrested. A damaged Mini could be seen at the scene, along with debris, including shoes. Authorities also say the suspect was a 24-year-old Afghan asylum seeker. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, and Lisa.
Thank you. Damian, have you ever played Torrey Pines?
No, I've not. I mean, I've been to San Diego. I love La Jolla, but I've not played Torrey Pines.
It's like magical, isn't it?
It was supposed to be at Riviera before the wildfires, so it got moved.
Oh, it got moved.
Yeah, it was supposed to be in LA, so it got moved down to San Diego. But what we're looking for here is we're looking for some action, man. I mean, look, Rory McIlroy won at Pebble Beach. I think
is he back?
Matsuyama, I think, is the money leader early on here in the PGA season, and we got to see. I don't know. I'm sure Scheffler's playing, but I haven't really looked at the card and when these guys are teeing off this morning. But yeah, I mean, it's golf season, baby.
Is there spring training in golf?
Yeah, of course there is. I'm actually in spring training right now.
Oh, you're in spring training.
I go to the simulator. Yeah, sure, totally. I mean, I'm breaking down my swing this year.
It's just, I heard it broke down last year as well. Damian Sassower on Torrey Pines. It's Bloomberg Surveillance.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Damian Sassower in for Paul Sweeney. It is the daily look at the front pages. Lisa Mateo joins today we thank IBKR for their support. IBKR, will the U.S. CPI exceed 2.4% next month, March 2025? Trade your prediction with IBKR. Forecast trade, or the yes, was recently, it's 60%, 60 by yes, or no, and earn $1 if you're right. Go to ibkr.com/forecast. Lisa Mateo.
All right, it is happening. Android phones now getting Apple TV for the first time. So if you look, it's on the Google Play Store. It's a free download. Before, you can only get it on Apple's own operating system, third-party platforms like Roku, but they want to boost their streaming subscribers. I mean, they had the hits. They had Severance. Right. They had Ted Lasso, huge hit. But it's just been lagging behind.
They're lagging behind, but they're catching up. Neil Mohan of YouTube, the leader at YouTube, who we owe so much to in terms of this successful experiment, put out a lengthy note yesterday. And I was sort of thunderstruck how Google's not resting on their laurels. They've got this project, that project. They got the Lisa Mateo project.
Well, Lisa, how much does it cost to get TV Plus?
I think it's like $9.99 now. They increased it. Yeah, it used to be $4.99.
Oh, that's cheap, right, Tom? Guy like you.
Paul Sweeney will say how many people are actually watching Apple TV Plus, and I don't know.
I mean,
what I see at home is YouTube and Netflix.
And
that's my extensive summary.
Yes.
It's what do you got next?
That's all my kids have, YouTube and Netflix. Okay, so this new side hustle is back in the spotlight. We're talking about the professional line standers.
Ooh.
The people who stand in line and people pay them to do it to get certain things. On TaskRabbit, they jumped 18% in U.S. in November and December. The reason why, though, they're saying is because retail brands are leaning into these luxury real-life experiences that you have to stand in line for. So since more people are doing that, they need more people to stand in line for them. But also restaurant reservations, I didn't realize this, but some of them you do have to stand in line for. You can't just call or go online and make a reservation. So they have that, like Lucali in Brooklyn, where like Taylor Swift and Kelsey, went. So those places you have to stand in line for.
Oh, since she lost, you're calling him Kelsey now? It used to be Travis, right?
Sorry.
So
Travis Kelsey.
Lisa, how
Mateo.
The restaurant thing is out of control. I mean, Damian, you have a real life.
Well, I mean, my question is, look, we need some income in my household. I've got 3 little kids. Can they stand in line? Can we pay them? I mean, like, how old do you have to be a professional line stander?
I don't know, but they can make up to $27 an hour.
That's what I'm saying.
The restaurant thing, I don't have the patience for the restaurant thing.
Yeah.
I'm just like, is it? Do you experience this?
I do. But to have to stand in line to eat at a restaurant.
Somebody the other day said they were denied
online?
entrance because they didn't give them their phone number. They said, "I'm not going to give you my phone number," and the restaurant said, "Go away." It was McDonald's. Next.
All right, last one. Tariff fears are changing a lot of things, right? We've been talking about it, but the fears in Europe actually pushing dealers to fly gold bars by commercial plane from London to New York.
Wow.
So we all know, right? Sparking the biggest transatlantic movement in physical bars in years. This is from the Wall Street Journal. They're saying traders, major banks, they want to yank them from the vaults deep below London streets. Also, Swiss gold refineries,
how big a bar?
and bring them across. They're saying J.P. Morgan, HSBC,
No,
all
but
these
what's
banks.
the size? I mean, like
the size of the bar.
A James Bond-like
gotcha.
size of a gold bar would make the plane tip, right?
They're on commercial planes. If you're coming from London to JFK, you might be on a pretty pricey plane.
What I think Lisa's really onto here is the fact that a gold bar costs a lot more in Manhattan than it does in London, and so that has everything to do with dollar sterling. I mean, with the British pound.
I would just opine that if you're coming out of Milan, the gold bar is called a Fendi bag. You buy a Fendi bag at the Fendi store there in Roma or whatever, and that's like a gold bar equivalent.
Like, you've never been at Bloomingdale's across the street when a senior kind of pulls a gold bar out of her bag to try and pay for a pair of shoes?
Lisa, how was Pantera in Berlin? I mean, it was like
people are actually believing that when they see me.
It was great.
I mean,
I'm glad you stood behind the speakers as well. Hey, Dua Lipa. Good morning. Damian has demanded Dua Lipa.
Don't show up, don't come out, don't start caring about me now. Walk away, you know how. Don't start caring about me now.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Sweeney, the Grizz on a steamboat, having a good time of it. Lisa Mateo back from, I believe it was Atlanta. Lisa, what were you doing there? This was for the support of the terminal.
Yeah, the Future Investor Series. So it was really great because of all the volatility in the market, showing where people are finding the opportunities. So that's what it was. Selfless plug, we're back in March in Chicago and June in San Francisco.
No, they're loving it.
They are.
Yeah, it's like really working for you, isn't it?
Yes, and people are loving this show. Can I just tell you? When we go out, I go out there, and they are loving it. They're saying, Tom, they love the music selection.
Are you signing autographs?
No,
you should charge them for that,
No.
Seriously.
But they love your music selection, too. I just wanted to let you know that.
Can I give you one autograph anecdote you won't believe?
Oh, no.
You won't believe.
Yeah.
Mrs. Keene, we land in Paris. We have to go to Notre Dame. We're there at like 5 a.m. It's like feed the bird. There's no one there. Right. We get in right away. The lines are like forever. So we go in, and it's really amazing. I'm not going to bore people with it right now.
Please do.
We come out, and a guy wants an autograph outside Notre Dame Church. I mean, that's the reach of the show.
No kidding.
Out of YouTube and what we're doing globally, thanks to Ray YouTube for all his work on this, and subscribe to Bloomberg Podcast to get more of Lisa Mateo. We're going to get right to it because Jeff deGraaf is with us. This is actually a really important, lengthy interview for Global Wall Street. Right now, from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Yeah, little movement this morning in futures. This is ahead of more inflation data. We have PPI out about a half hour from now. So futures, little change. We have the 2-year yield, 4.35%. Little change. The yield on the 10-year, 4.59%. That's down 1 basis point. European stocks climbing, optimism about a possible end to the Ukraine war. We have the DAX in Germany up more than 1.5%. The CAC in Paris up more than 1%. Over to the euro, I want to point that out. It's little changed at 103.87 against the dollar, but the Bloomberg dollar spot index is little changed. Shares of Deere, they're down more than 5%. It maintained its outlook during this farming slump, but just wasn't enough for investors. Coors, Molson Coors reported profit beat expectations. Its shares are up more than 2%. Shares of Crocs are soaring. They're up more than 15%. Adjusted operating margin for 2025, about 24%. That was in line with estimates. And I have to point out Hertz because their shares are really falling down 7% now. Fourth quarter revenue missed estimate. That just coming out right now. That is your Bloomberg Business Flash. Damian and Tom.
Lisa, thanks so much. This is so well timed, I can't stand it. Let me set it up for you folks. There's two kinds of charts: technical analysis. First, like literally the second day I'm at Bloomberg, Peter has me in the office and he says, tell me about technical analysis, because he thinks it's voodoo and smoke and mirrors. There's two types. There's trend-based, which is what I do, and then there's more momentum stochastics, the dynamics of the immediate market. Jeff deGraaf, and I promise we're going to do more deGraaf this 2025. Jeff deGraaf owned this at Lehman Brothers years ago. He's now technical research co-founder Renaissance Macro. And this is well timed because yesterday on the Scott Wapner marathon at the Death Star, I mean, Wapner's on for like 6 hours straight. There's somebody on the show going after Jeff deGraaf.
Unbelievable.
On exuberance. So folks, for Global Wall Street, deGraaf has the exuberance meter in hand. Jeff, I was amazed yesterday how Wapner had to defend you on the Death Star. Jeff deGraaf, are we overly exuberant right now?
I don't think so, Tom. And I do appreciate Scott sticking up for us. I'll have to send him a bottle of wine at Christmas. That gives me
give him
9
some of
months
that
to save up.
MD20. Wapner deserves an MD 2020. Give him that. Are we overly exuberant?
So I don't think so. And let me explain why. We measure the spread between high momentum names and low momentum names. And it's really nothing more complicated than saying, if we rank names over the last year, what names are at the top 20% and what names are at the bottom 20%, and then how are those two buckets doing? And when we look at the 65-day rolling return of that spread, which I know this is a snoozer, but right now it's at the 82nd percentile. When it gets to the 90th percentile, and we play momentum. We, just like you, we play trend. We believe in those things because that's the right thing to do through time. Right. We can tell you that when it gets to the plus 90th percentile, we'll take a step back and say, look, too many people are playing this, and this is way too dangerous for a reversion. And so while there are a few anecdotes that got thrown out there with the Metas and the Plantaires and et cetera, but those are anecdotes. And when we really look at the meat of it, even just the top 100 names in the Russell 1000, we're not in that 90th percentile. And why that's important, Tom, is the risk is that you say, okay, it's overbought, I'm going to sell them today. And the next thing you know, your app 11 is up 30%. And, we all know this, the market generally can be so seductive that it brings you back in at exactly the wrong time. So to be too early to fade the momentum trade really is dangerous and requires a lot of mental fortitude, if you will. And I don't think most people have that.
Jeff, I did everything I could to be sure Damian Sassower was with me today. Damian.
Jeff, I mean, look, Tom mentioned it early. You were at Lehman Brothers from 98 to 2007. I'm sure you remember that a young, aspiring, emerging market strategist came into your office in 2002. His name was Damian, by the way. And he didn't ask about oscillators. He didn't ask about Bollinger Bands. He was asking about the Ichimoku cloud. I mean, do you remember this conversation? Probably not. But here's my question for you. You look at performance year to date, and you're absolutely right. Equity momentum is the leader. It's up something on the order of 4% year to date. Trend is sucking wind here. Talk to us about these trend-following strategies. Talk to us about that nice upward-sloping risk-adjusted return that you're supposed to get from trend and why the strategy is not delivering.
Well, it's a fair point. And look, it's not going to deliver all the time. And so we have to be careful of that. And I do remember, because there aren't many people that talk about those clouds, which I can't even pronounce, so I won't try. So you did hit the nail on the head when they say, be unique, be unique. That certainly was it.
Thank you.
I'm looking for the technical analysis dictionary, trying to look up what the heck you were talking about. The bottom line is trends trends work, and we actually are seeing trends intra-market work, right? In other words, we're seeing trends within the sectors work, we're seeing trends within the industry groups work, we're seeing trends within the actual stocks work. The difference is what we have today is more of a trend market than a momentum market. And what I mean by that is even though we're within, less than 2% of a new high, we have less than 50% of the names within the S&P 500 above their own 20-day moving average. Now, that's not a high bar, right? The 20-day moving average is obviously just the average over the last month. So it really is this rotational market that we're seeing. And that's why I think it's so frustrating for people that we've got the market very close to a new high, and yet 50% or only half the names are above their own 20-day moving average. And that gets really frustrating for portfolio managers. It is, though, at the same time, a very good market for long short. I mean, that is kind of the definition of what you want, which is I have the ability to add value through what I'm seeing on a long short basis.
Pro tip here, and this, of course, is part of Jeff deGraaf. I studied the clouds years ago. I had like a 2-week looking at Kenjusen and Senku Span A, and I just said, I don't get it. And what, folks, one of the big advantages of the Bloomberg is you can study the different technical theories to decide critically what you do like, and it's far more important, as Jeff knows, what you don't like as well. I went down at flames on the itch.
And you can back test them. BTST on the terminal, guys. You have to check it out. But the RenMac Weekly Survival Guide is must read. It is a must read for anybody in the financial markets, and that is all you, Jeff deGraaf. Talk to us about what's going on with copper. I mean, copper, Hang Seng correlations, overbought in a weak trend. I mean, I'm catching this. It's up 8% year to date. What is going on in copper?
Well, it certainly has started to fire up, and that's reassuring because we are seeing some signs in the overall market that the cyclical part of the market is coming under pressure. So getting a little bit of a boost out of copper is certainly helpful. And you hit the nail on the head, at least in our opinion, which is we think, and we've been in this camp for probably 6 or 9 months now, that China is in the bottoming process. We had trend changes last year. We had a momentum surge, and there's a very good relationship there between the price of copper and both the Hang Seng and the Shanghai 300. So, really our biggest, most bullish call, and we've said this, and I'll say it here, we think China is in the 08-09 stage where the U.S. was. We think that it is in that moment. That look, you had one of the things that we measure is alpha through time, and you can do this with markets, you can do it with sectors, you can't do it with stocks, or you can, but it's not going to give you any information. The alpha generation in Asia, particularly Hong Kong, the negative alpha generation was as extreme as anything we'd seen in 40 years. And unless you think that it's just going to evaporate and they're no longer going to be a global player, that just isn't sustainable. And so that can be early, and we certainly recognize that, but it was the momentum and the trend change that really said, hey, these two things combined are pretty powerful. And I think that's the residual of what you're seeing in copper.
For all of you across the nation and your morning commute, particularly for Global Wall Street on YouTube, subscribe to Bloomberg Podcast. It's our new television. Thrilled with what we see on YouTube. Jeffrey deGraaf with us for an extended conversation here from RenMac as we look at technicals and fold that into just as much not losing money is making money. Jeff deGraaf, the big change here, going back to the fossildom, I think of Chartcraft up in Larchmont and Wells Wilder and ADX DMI and all the trend-based stuff, to Damian at Lehman years ago with you at Merrill and Lehman. Jeff deGraaf, what's so different now is the financial media. And there's this frenzy, particularly on Fridays, of trying to market time by not participating in the market. Basically, it's one big media frenzy, go to cash. How should our listeners and viewers use your skills to participate in the market, even if they're hit with a frenzy?
Well, that's a really, really good point, Tom. And I mean, this gets very philosophical, but let's start with the buy and hold, right? Or let's just say a 12-month time horizon, or even a 6-month time horizon. Your probability over the last 100 years of having a positive return over a 6 or 12-month time horizon is above 60%. It's right around 65%, frankly. So let's call it 2/3 of the time. So if you think about that, if you had a coin and you flipped that coin and you had that advantage of being right 2/3 of the time, you're going to win a lot of money, right? So there's an extraordinarily high bar, and I think this is what people miss. There's an extraordinarily high bar to be bearish, right? Just your default position should be bullish. And as I as I always, quip when people ask me, how am I thinking about the world? I'm like, I'm a fully invested bear. That's the way I think about the world. I'm always looking over my shoulder, but I know that the default position should be bullish. That's not to say we're always bullish, because we're not. But again, the bar is so high to be bearish, and I think that's what people need to recognize. And one of the ways that we do that is through trend following, and we just say, look, if the trends are not on our side, then we have cleared that bar, at least one portion of that bar that we need to think about. And certainly we think about the Fed, we think about money supply, we think about some other things, valuation, all those things are important in that mixture. But really the one that stands out to us that's been the most consistent through time, because the circumstances change as to why there's a bear market. The market itself does not. The market will tell you that it's in a bear market simply by the trend. And so that ends up being our kind of final arbiter, if you will, of our market calls.
Jeff, a lot of strategists, myself included, we kind of make that mistake of equating technical analysis really with the equity market. But let's be clear, a lot of other markets, specifically rates and FX, trade on technicals. Talk to us about those markets. Are your indicators picking up movement, picking up direction in for example, the U.S. Treasury market?
Yeah, that one's a tough one. I mean, I will say we've been, both Neil Dutta, who's our economist in our shop, and myself, we've been more optimistic on, yeah, right. Don't tell him that. We've been more optimistic on bonds, frankly, than what the outcome has been. And part of that is because the trend has been mixed. And our underlying data says, look, even though we had this inflation print, it looks to us, if we look at the really key root causes of inflation historically and where we are with the Fed fund, a 2-year yield, and a bunch of other factors, it says to us that bonds are actually probably a pretty decent buy right here, if we were to look at it out the next 12 to 18 months. I know there's a lot of uncertainty around that, but that's always the case. So the kind of gold standard, if you will, of some of the indications that we look are still saying that bonds look attractive. So we haven't had a strong call on that, or a good call, I should say, over the last 3 to 6 months. So certainly our tails between our legs a little bit on that one. But I think one of the best things for technical is in FX, because you do get these policy shifts that don't tend, I know that the new administration may be an outlier here, but they don't tend to be that volatile. They kind of set a trajectory and they go. And so, one of the things that we're actually seeing right now, which I think is interesting, we're not getting the trends yet, but we are seeing some setups, is just the outright bearishness of Forex, right? So Canadian dollar, the euro, dollar. I mean, these things are really, really washed out. So even though the trends aren't in place, we have a couple setups in those that suggest that we probably get some relief in those currencies.
Jeff deGraaf just set up Damian Sassower there for our last question.
Well, I mean, he took the words right out of my mouth. I mean, really, the reality is when you're looking at rates and you're looking at fixed income, the reason technical analysis, in my opinion, doesn't work as well is because of carry, right? I mean, you've got this coupon income that kind of smooths your returns out over time. But let's talk about BBDXY. Let's talk about the dollar here. We've seen a 160 basis point reversal in the last month, Jeff. I mean, it's choppy this year, man. So talk to us a little bit about what your indicators are telling you about the future direction of King Dollar.
Well, I think the overall trends for the dollar are still firm. I think it's in this long consolidation zone, right? In other words, overbought, momentum is fading. That usually results in a consolidation that takes you back into the longer term trend, if you will. Kind of think about it as a regression. I think the biggest weakness for the dollar here, the vulnerability is probably a better word, is what we see in that sentiment setup, right? It's become such a one-sided trade that anything that kind of shakes that is going to have people clamoring to get right-sided again, and that's the challenge.
Jeff, I got to get to that. Was very Luis Yamato, by the way. Jeff deGraaf, just simply, what is the best way to express long China?
Well, there's ETFs, there's the FXI, there's the MCHI, I believe it is.
Don't say Alibaba.
There's the KWeb. There's a lot of ETFs that you can have exposure. EWH is Hong Kong, so there's plenty of opportunities there to get exposure.
Jeff, thank you so much. Don't be a stranger. Mr. deGraaf works with Mr. Dutta at Renaissance Macro. I should point out that Mr. Dutta was my Economist of the Year, I think 2 years ago, with his incredible optimism on the American public.
Yeah, so what you're saying is he didn't do such a great job last year, right, Tom?
No, he did fine. But just, he was the
he
guy.
Was awesome. No, he was awesome.
The guy leading within the gloom of, 24, 30 months ago.
I bumped into him in Coach. We weren't even in Comfort Plus. I bumped into him in Coach on the way down to Florida. He was with his kids going away for the holidays. It was awesome.
Yeah. Were they well behaved?
Very much so. Not my kids, but his kids were like angels.
Unbelievable.
Incredible.
News you can use. With our news in New York City, his children are not well behaved. Michael Barr.
True that. Thank you very much, Tom, Damian, and Lisa. Kidding. Indian Prime Minister Narendra Modi is meeting with President Trump in Washington for the next couple of days in the shadow of the threat of reciprocal tariffs. In fact, this morning, Trump posted on his Truth Social platform, "Today is the big one, reciprocal tariffs." Bloomberg's Amy Morris reports from Washington.
Modi has made concessions to Trump, who has threatened tariffs on India because of its high levies on U.S. goods. White House Press Secretary Caroline Leavitt says those reciprocal tariffs will likely be announced before the president meets with Modi.
I do believe it will come before the prime minister's visit, but this is something he believes strongly in. Far too many nations around this world have been ripping off the United States of America for far too long.
In the past few weeks, India has slashed tariffs on items from motorcycles to luxury cars, agreed to take plane loads of undocumented migrants, and pushed to ramp up purchases of U.S. energy. In Washington, Amy Morris, Bloomberg Radio.
President Trump says he and Russian leader Vladimir Putin have agreed to begin negotiations on ending the war in Ukraine. He also said he later spoke with Ukrainian President Volodymyr Zelensky. White House Press Secretary Caroline Leavitt says that Trump administration officials are set to meet with Zelensky this week on the sidelines of the Munich Security Conference.
Secretary Rubio and also the Vice President, J.D. Vance, will be meeting directly with President Zelensky in Munich on Friday.
President Trump and Elon Musk's government efficiency team scored a win in court. A U.S. district judge ruled that labor unions do not have legal standing to sue over a buyout offer to millions of federal employees. Authorities say 28 people were injured after a car drove into a group of people in Munich, Germany, not far from the Munich Security Conference. A local governor says it appears to be an attack. Munich police say that they have detained the driver, who is believed to be a 24-year-old asylum seeker from Afghanistan. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
Michael Barr, thanks so much. You mentioned Alibaba and the talk of Apple yesterday. Yes. And as Jeff deGraaf talks about the new China, I'm not making a prediction here, but boy, that is the outlier call. I mean, talk about removed from consensus right now.
Well, I think Baba was the easy one here. I mean, it's up 40% year to date, Tom. I mean, what a move. But I mean,
which is stocks getting out front of the expectation here.
By comparison, the MSI China's up only 9%, right? And if you look at other peers like Tencent and Meituan, they're up something like 6-4% respectively. So Baba's the big outlier, Tom. I mean, it is definitely the beast out there.
To be clear, China index is up 9% in 2025.
Yeah, in dollar terms, MSCI China.
But how many people know that, given the China gloom we get each and every day?
Well, I know it.
Well, yeah, I know you. That's why you're here.
I mean, I'll tell you the other thing that's kind of interesting is if you do look at the property sector, things are actually getting worse on the ground in China. So people are scared. I mean, you look at Vanke, the government just stepped in and backed it up. Vanke is, by the way, one of the bigger property managers in China. So, yeah, I mean, it's not like a bull call or anything.
What's the asymmetric look at yuan at renminbi at 7.30?
I think what we really have to look at is yen versus yuan, and I got to tell you, the yuan is challenging the yen for the low yield throne in global rates. I mean, we are not far off. If you look at U.S., China yield differentials, they are borderline getting close to Japan now. It's unbelievable.
It's amazing, folks. We'll come back and talk about yen renminbi.
The Japan.
You can do that on the Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we have futures pretty much treading water this morning. This is ahead of PPI data out in about 5 minutes from now, so stay tuned for that. We'll go to the yield space. The 2-year yield, 4.35%. Little changed, and the yield on the 10-year, 4.59%. That's down 1 basis point. I have to point out commodities this morning. Brent crude down more than 1%, $74 a barrel. WTI crude, $70 a barrel. COMEX gold, $2,940 an ounce. We go to the Bloomberg Dollar Spot Index. That is little change. Right now, shares of Barclays, they fell the most in 6 months. The bank left its earnings guidance for the next year unchanged. Its shares down about 3% in London. Then you have Nestle shares. They rose the most since 2009. It increased its dividend, gave a solid guidance after sales growth beat. Its shares are up 5% in Switzerland. And Unilever, their revenue grew less than expected. It also said it's going to demerge that ice cream business. Part of the slim down its business. Shares are down 5% in London. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. I'm Lisa Mateo. That is a Bloomberg Business Flash. Damian, Tom.
Lisa, thanks so much. Damian Sassower in for Paul Sweeney. We got PPI coming out in 4 minutes. We're going to do Julia Pollak right now of ZipRecruiter. Do PPI, then come back to the wonderful economist at ZipRecruiter. Julia, good morning to you. UCal Irvine has a really, really staunch history in computer science. I saw a chart today of the death of technology jobs, witness Meta laying off, etc. Do you at ZipRecruiter advise people to go into computer science type programs now? What do you see at ZipRecruiter?
That is a great question. So tech was the place to be in 2015 to 2019. Huge job growth, wage growth, and as a result, people responded to those market signals. Government, economics, those were sort of the big concentrations when I was a student in college.
Yeah.
But now, overwhelmingly, computer science is the biggest major at top schools. And those students are struggling. Tech has not just stayed flat the last 2 years, it has lost jobs for 2 years. And we learned that with the last jobs report, with those benchmark revisions. All those curves were sort of flat before, and they've actually kind of swiveled around, rotated downwards since then. So we know tech is having a pretty gloomy season, and the announcement of further tech layoffs suggests there's just continued pressure to optimize and become more efficient. Tech companies aren't really looking to grow at the moment.
Julia, we've got claims coming up in just a few here, but I really want to ask you about the noise in the U.S. job market. And by noise, I mean, if I just look back, we look at, weather-related incidents like hurricanes, the L.A. wildfires, but now we've got these government buyouts. I'm curious to hear your thought on what, if any, impact that's going to have on these figures.
I think it's going to have a huge impact in the aggregate. So first of all, these workers are going to stay on payrolls for the next 7 months, even the ones who've accepted the buyouts. And then when they do, they probably won't go into unemployment. Most will go from payroll to payroll. 7 months is a long time to find a job. Most people, even today, find a job within about 2.5 months. That's the median unemployment rate, unemployment duration. So you're not probably going to see it much in the aggregate statistics.
I'm also curious about, this whole concept of hybrid work, right? We've seen a lot of people returning to the offices. I mean, Jamie Dimon wants everyone back in the offices. They want me back on Sundays. I want to ask you what you're seeing in the numbers in terms of, remote work. I mean, does it still exist? Is it turning in the other direction, or are we sort of flatlining here?
Let me define that for you, Julia, here. What he's talking about is work from Golf Simulator.
No one said that. No.
All right. So we did a major employer survey recently at ZipRecruiter, and 31% of employers have pulled back on remote work and imposed some kind of return to the office mandate. But wait, 33% have actually expanded remote work. So you have an interesting situation where in the aggregate, remote work is actually flat as a pancake, to quote Nick Bloom, the big scholar of remote work. And especially if you look at Fortune 500 companies, more than 80% of their corporate employees are allowed to work remote or hybrid. Among companies founded in just the last 10 years, young, new companies, it's more like 90-something%. So remote work is here to stay, but at the big, stodgy, older companies, and Amazon fits that bill these days. JP Morgan fits the bill these days. These are older companies. These are not the new scrappy startups. Yes, you do see leadership liking the office.
Julia Pollak with us. She will stay with us after we see the data. I'm glad Damian brings up. We'll also get claims here. Initial claims. That statistic and survey, 216,000. I can't say enough, folks, about Julia's observation there on Professor Bloom of Stanford. His ambiguity over the last 90 days. I mean, even the guy who's smartest on this and has put the most data work into it is unsure which way hybrid is cutting.
Yeah,
I mean, it's just that simple. Let's do this. We're going to get to the PPI report right now. We've got red and green on the screen. The VIX, 16.12.
And the news just coming out. So yesterday, CPI came in hotter than expected. Today, PPI for January, hotter than expected too, up 3.3%. That was the expectation, came in at 3.5%. That's year over year. We take food and energy out of the picture, 3.3%. That was what expected. Came in at 3.6%. Want to go to initial jobless claims. The expectation was for 216,000. Came in a bit lower, 213,000 applications were filed last week. Now we see the difference in the markets just a bit. Right now, we have NASDAQ futures up about 0.1%, 25 points. We have Dow futures, still little change. S&P futures, still little change. The 2-year yield, 4.34%. That's little change. And the yield on the 10-year, 4.60%. That's down about 1 basis point. But I heard a couple wows from you, Tom. I did.
Yeah, I did. In revisions, Lisa, which you didn't have, I didn't have
Just
it either.
in.
Just out moments ago, the revisions set higher as well. The annual revisions, which are critical here, will be part of it. But these are wow statistics in that they confirm what we saw yesterday in CPI with this set of business inflation statistics, final demand, and the other mix of it, different from 20, 30 years ago, the way it's measured, show a sense of inflation. A little bit of green on the screen, the red and the green go out as well. But in the yield space, I'm going to call it confusion. Initially, lower yields. I really need to see where that settles out over the next 10, 15 minutes as you digest this data. And Damian, the 10-year real yield, 2.15%. It's beginning to pull up a little bit.
Yeah. It was at 202 just a few weeks back. I mean, look, now this puts the onus on tomorrow's import price index because that should come in pretty hot as well. And if this inflation narrative that things are kind of heating up here starts to get hold of the markets, that whole asymmetric risk-return profile in terms of the Fed cutting before it hikes goes out the door. So
I agree totally. And let's go to Julia Pollak here with ZipRecruiter. Julia, I got CPI up, I got PPI up. If I get a nominal retail sales tomorrow, which has some energy to it, do I get to a nominal GDP that sets us up for a hung Fed where they can't move?
That is quite possible. I mean, this is some of the January figures could be seasonal noise. We know that in the past, January reports come in hotter than others. But there's a choppy path ahead. Employers are going to hold back because of these high interest rates until there's sort of greater clarity, and consumers and businesses face continued cost pressures, and this is a big problem for the economy. I think everyone had hoped by now that we would be heading towards a 3.5% 10-year, not a 4.5% one.
The biggest deviation, Damian, is PPI core, ex food and energy year over year. 3.3 was a survey. The revision is higher, 3.7.
And it still gave you a year-on-year increase.
And the statistic today is 3.6. I mean, you fold this into Trump tariffs. Like, where are we, Damian, 4th of July?
Well, I'll tell you where I am. I'm 51 years old. And, I want to go back, Julia, to what you said before the break when you were talking about these stodgy old companies. And you mentioned JP Morgan. And, I mean, maybe I'm getting a little bit old here, but that doesn't seem stodgy to me. And I guess the question I have for you is, within what you're seeing at ZipRecruiter, the demographics beneath the surface, what about guys my age? Like, are they finding jobs? I'm just curious. It's an AI world. It's young. It's tech-driven. Where are the jobs coming from?
So healthcare is the big exception. It remains month after month after month the one bright spot where it's the one industry where a hiring rate has gone up.
Biotech, life sciences. No, I'm just kidding. I'm kidding. No, but I take your points on that. So healthcare is one. I mean, but that can't possibly support the market the way we're seeing here. I mean, where are these payroll? Is it immigration?
But every other sector has seen a major decline in the hiring rate, or it's sort of flat, and job growth has been flat to negative in most sectors. Just a few areas where new jobs are being created.
Please come back. Julia Pollak with us with ZipRecruiter. We love to speak to her about the incredible digital-driven granularity of ZipRecruiter. I've got to point out the chart that's out from left, right, everybody in the middle. The job formation of Americans versus recent immigrants. It is a stunning chart of job formation among those new to America. Green on the screen, futures up 5. Damian Sassower and Tom Keene, much more coming up on YouTube, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, starting to see a lift to the markets. This is after U.S. wholesale prices picked up in January. Higher food and energy costs, big part of that. PPI rose 0.4% from a month earlier. That was following an upwardly revised 0.5% increase in December. On the jobs front, you had initial jobless claims a bit lighter than expected. 213 applications filed last week. So we'll start with NASDAQ futures, up 0.3%, 72 points. Dow futures and S&P futures up 0.1%. The two-year yield, 4.32%. That's down 3 basis points. The yield on the 10-year, 4.57%, and that's down 4 basis points. The Bloomberg Dollar Spot Index down about 0.1%. Few companies making news. Haven't gotten to that lately. Honda, Nissan formally ended negotiations to combine. They say they're still going to continue their partnership with Mitsubishi and also collaborate on certain developments. But now we have another twist. KKR said to be considering investing in Nissan. We have shares of Alibaba up more than 9% in Hong Kong after word that Apple's iPhones will use its AI technology in China. And finally, shares of Chinese tech company Baidu up 5% in Hong Kong. ADR's up 4%. It said it would make an AI chatbot freely available. That is your Bloomberg Business Flash. Damian and Tom.
Lisa, thanks so much. Need to say green on the screen here. Futures up 11. Dow futures up 81. VIX comes in solid. 17 level yesterday through 16 out of 15.65 on the VIX. Damian, in the yield space, okay, higher PPI, CPI, EIO, but the answer is yields come in off of the abrupt move yesterday. What say you?
It's that market conditioning, right? It's that asymmetry. The markets are basically banking on the fact that the Fed is not hiking rates here. They are not going to choke this U.S. economy, this growth narrative. They are going to basically sit on their hands, let things play out. And look, maybe it is a rage-bound Fed that is driving basically the rest of the world higher. Somebody who's enjoyed getting it right, Maria Vaitmane joins us right now. Equity research, global markets research at State Street, where we get a huge response when she's on because it's a measured approach to do. This morning with reciprocal tariffs, is the Vaitmane apple cart tipped over?
Well, I like tech stock for a long time, and tech stock survived quite a lot. I mean, to us, in the world of chaos, what do you want to buy? You want to buy large cap quality companies that have lots of cash flow, have lots of very stable earnings and low leverage. And ironically enough, all roads lead to tech.
I mean, within that, Maria, though, is tariffs. I mean, you've been dead on. Yep. You've absolutely nailed the bull market. Are you worried that at some point out there with Washington Trump policy, it ends?
I mean, to say that I'm not worried would be wrong, but there are kind of couple of angles to think about it. I mean, first and foremost, I think policies that U.S. administration is kind of enacting are U.S.-centric. They're trying to bring business to America. So we can argue about the size of the overall pie, but the share of U.S. businesses, share of U.S. profits are likely to increase, whether we like it or not. So policies are U.S.-centric. So I think that's the direction of kind of money flow in the medium term. But more importantly for us, the lens we're viewing tariffs through is what does it do to earnings? And arguably not very much, as majority of U.S. S&P earnings come from tech sector, which is probably not likely to be upset very much. And what does it do to inflation? And right now, we're watching inflation expectations as everyone else. And the recent numbers are a little bit concerning, but watching break-evens very closely.
So it's okay, Maria. Here's where I need to kind of get a little bit more clear here. You like growth stocks, you like the tech, you like the Mag 7. I mean, it's been good to all of us. I know this, but how much of that move is due to rates, is due to duration? And as rates kind of stay sticky and maybe even start to creep up from here, just how long can that Mag 7, that narrative play out in the market?
Yeah, no, that's a very good point. And I think last year, so we had two very, very strong drivers of equity return. One is, as you correctly say, is a lower interest rate, and that to me is beta. That elevated all stocks higher. But then if you look at alpha, there is incredibly strong correlation between last year performance and last year change in earnings. So stock, sector, styles, countries with better earnings, which is your tech, growth, large cap, US, done significantly better than sectors, stocks and styles and countries with weaker earnings. So energy, materials, Europe, emerging markets, small caps. That's why earnings growth was weaker. So relative performance, your alpha was very, very much driven by earnings. And I think this year we'll have less of a support from interest rates, from your beta. We need to rely on those earnings much, much more. So look out for earnings growth.
Maria, thank you so much. Congratulations on really participating in the lift here that we've seen in Mag 7. Maria Vetman with State Street this morning. The market lifts off PPI. Futures up 9, a little bit more green across. NASDAQ 100, I should point out, Damian mentioned Alibaba and Apple yesterday in China, continuing a 0.3% move higher there. With our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, Lisa. Today is the big one, reciprocal tariffs. President Trump posted that on Truth Social this morning as he gets ready to meet with Indian Prime Minister Narendra Modi at the White House. Bloomberg's David Gura has more.
Narendra Modi, the prime minister, has sort of made overtures and changes to a number of the tariffs policies in his country ahead of this visit. He met with the new director of national intelligence, Tulsi Gabbard, yesterday. So this is an important visit for him, yes, to sort of see if he can shore up the trade picture for his country and the U.S., but also just to sort of reestablish that relationship that he had with Donald Trump. Of course, President Trump in his first term made a visit to India that was much ballyhooed and widely covered. Here we're going to see Prime Minister Modi trying to rehabilitate that relationship in person.
Bloomberg's David Gura. The president and prime minister are set to meet this afternoon at the White House. Press Secretary Caroline Leavitt says she expects Trump to announce the tariffs before the visit. In Washington, D.C., parents, educators, community leaders, and elected officials gathered on the Capitol grounds to protest Department of Education cuts proposed by President Trump.
Oh, I'd like it to be closed immediately. Look, the Department of Education's a big con job.
Independent Vermont Senator Bernie Sanders addressed the protesters.
What these guys, the oligarchs and the billionaires, want to do is cut program after program, including education, in order to give massive tax breaks to the very richest people in this country.
They also protested student civil rights protections that have been curtailed or eliminated by Trump's executive orders. A driver drove a car into a union demonstration in central Munich today, injuring at least 28 people, including children. Officials said it was believed to be an attack. The suspect, a 24-year-old Afghan asylum seeker, was arrested. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. And back to Tom, Damian, and Lisa.
Okay, baseball talk here. Now, away from the expected. People expect me to talk about the Red Sox and Michael Barr about Detroit and Damian about the Yankees and the Mets and all that. Off the path, I'm looking at Terry Francona, retired, drops by Cincinnati to take over the young, unruly, undisciplined Reds, including Ellie De La Cruz, who ought to be playing for Detroit, Michael Barr. But I'm watching Reds baseball right from the get-go this year.
Yeah,
What are you
you're
watching,
Michael Barr?
Well, you know what I'm watching. It's got an old English D on it. And
What about the Mets? I haven't talked enough
I was
about the
just going to
Mets.
say, I'm a Yankee fan, but I'm really excited about the Mets
It
this
is,
year.
yeah.
I'd love to see Lindor and Soto.
Yeah.
I mean, that's going to be fun to watch.
I'm reading Roger Angel right now. I've gone back. I had the honor of meeting him at the '86 World Series. I'm reading Roger Angel, who defined baseball literature way back. I'm reading his first book. And the star of his first book, are you ready?
Yeah.
Ed Kranepool.
oh, man.
Of the original Mets.
I've got his baseball card.
Do you? That's
Yes,
very
I do.
cool.
Yes.
He just died recently, but Ed Kranepool.
Yeah.
I used to have Tom Seaver baseball cards.
I had no idea how bad the Mets were.
Don't get me wrong, Mr. Cohen, but there was an old saying, meet the mess. Remember that? That's what people used to say way back when they started, and now look at them.
I'm really happy that you addressed that conversation, Mr. Cohen, right there, because it just shows the respect that he has now. And it's not that he's building a team for the future. It's not like he's that Soto signing, as expensive as it was. I mean, I think it was more combined than like 25 of the 30 teams in Major League Baseball in terms of what they spent this offseason. But look, he is building something special over there. So
for those of you across the nation, baseball talk with Michael Barr. It always comes back to Detroit. We say good morning to Mr. Cohen and the Mets as well out there as they have an exciting season in store. At some point, we'll talk about the dreaded Yankees and Damian. I don't.
I turned 51 on Tuesday. That's Bernie Williams' number. I just throw it on the back of my jersey.
Barr and I are laughing at you, like Michael. Do you wish that we could see 51?
Oh man, yeah.
It was my ute. From New York City with Damian Sassower, Edge of 51. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. It is Bloomberg Surveillance. Damian Sassower in for Paul Sweeney. And now here on a Wednesday, I think the White House was channeling Jess Manton. She wrote a piece there on Wednesday in tariffs. It matters, and the president to speak this afternoon. Jess Manton, it is Thursday. What does it mean to you, these tariffs today and the stock market?
So I wrote, as you were mentioning, a story about how this year things have been flipped around. So typically traders have been buying the dip in the middle of the week on Wednesdays. You wouldn't have seen that quite as often in the previous years because typically traders were buying it on Mondays and on Fridays. So really this just tells you, because I know Tom Keene's going to ask me the so what of this, that traders don't want to go along into the weekend just because there's a lot of headlines coming out, whether it's, say, in Washington, whether it's related to tariff news, or also just a couple weeks ago, we did have DeepSeek, which obviously rattled markets that following Monday.
So, Jess, what is the worst day of the week to be investing in? Is it Mondays?
It's actually right now, it's either Mondays and Fridays are kind of neck and neck right now. So basically, we're just 7 weeks into the new year, so you have to use that with a caveat. But Ryan Dietrich over at Carson Group, so he's a well-known stock bull, and I pay attention at inflection points whenever people like himself, say him or an Ed Yardeni, I obviously do a little shift in the shorter term and are near-term cautious. So he actually is. So that kind of perked my interest because he was crunching the numbers, and on an annualized basis, if you looked at Mondays and Fridays, you'd see so far this year that investors were dumping stock those days, so that on an annualized basis, it would have been a loss of over 40% for Mondays and Fridays, whereas on Wednesdays it was over 100%. But of course, just 7 weeks into the year.
Seasonality and sentiment, right, Jess? I mean, look, let me ask you about this. Do earnings even matter anymore? I mean, do people even look at earnings growth, earnings surprises? I mean, we got some pretty good numbers overnight from places like Cisco. I mean, Siemens. Talk to us a little bit about what's happening there.
So what's happening there is, if you're looking more, because this is backward looking, of course, if you're looking at the fourth quarter on those rewards as far as companies that are beating those estimates, but something else I watch very closely, especially when it comes to Gina Martin Adams, who you know very well at Bloomberg Intelligence. So they actually have a factor in their BI dashboard where you can look at guidance, and that's important if you're saying for what companies are saying for the current quarters. So actually right now it's trailing analyst estimates by the most since the first quarter of 2016.
We got to do this. We got a baseball theme going. Things are great. Damian,
yes.
Are you ready? 8,075 people at Bluebell Park at Texas A&M.
There we go.
To watch Vanderbilt in baseball.
Is that why you're in the maroon bow tie today?
It's like more than the St. Louis Browns used to get.
Anchor down, Vandy baseball. There's nothing better. Let me be clear.
Southern baseball, Rice and Texas, it's a huge deal.
Not just football. You know, we also are paying attention to baseball.
Have you ever been out to the park sober?
No.
Have you been to Texas A&M baseball?
Yes, I have. Well, while I was attending the university, but I have not gone in a while.
No, but it's what you do. You get a six-pack and you go out. You know, you sneak it in. And
that's how things go.
It's like a huge deal, right?
It is. And their baseball team is a killer team. Like, don't sleep on Texas A&M baseball.
Yeah, David from Sky TV emails in. Thank you, David Rhodes, for listening this morning. What's Rice, Texas A&M like?
Rice, Texas A&M.
That's like a huge rivalry.
It is actually, and especially because Rice is a private university. So a lot of people obviously want to think about when it comes to the football rivalry with, you know, that other school in Austin, the University of Texas. But when it comes to baseball, and also, I mean, our team made it to the World Series of college baseball as well. So
how did A&M do in the portal? No, I'm just
portal.
kidding. We're not going to ask about that. I think I heard they did pretty good, actually. I mean, maybe it was an A&M, maybe it was Texas Tech, but one of those Texas teams had a lights out.
No, with the portal, actually, especially with the recruits that are coming in, it's coming in pretty strong for next season. So I'm hopeful.
But for those of us up north, this is like a religion down there in the spring.
It is.
It's like I went to Vanderbilt baseball years ago in Nashville. It's like religion.
Well, parents and families on the terminal, you go to PRTL for the BI portal function to know who your favorite players are.
I love this. I didn't know about that function.
Lying. That doesn't exist, but we should have one.
Jess Menton showed up. She said she wouldn't make an appearance. One of her interns said she's not coming out unless you play Ellie Goulding. Good morning, Angela Stent on Putin in the next hour.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney, Michael Barr, Lisa Mateo. Thank you for your attendance on your morning commute on Android Auto, on Apple CarPlay, Sirius XM Channel 121, and good morning. Really, on the corridor, on 99.1 FM Washington, Angela Stent of Putin's World will join us here. Honored to have Dr. Stent with us here. Important conversations. We'll do that here in a bit. First, Jane Foley will be with us on the litmus paper of the system. Damian fired up on what BBDXY will do. There's $2 indices, and Damian's right. BBDXY, the Bloomberg Dollar Index, it is superior. We say good morning after PPI, a market lift. Futures up 10, Dow futures up 93, NASDAQ up 0.3. Small stocks lead the way as well. Yield space comes in a little bit churning. In DXY, is there an EM currency you can, brief me on this morning? Is there something crushed?
Well, it's interesting. I mean, we could talk about Mexican peso. Well, actually, if you want to talk about something that's crushing, you got to look at the Hungarian forint. I mean, it's at its highest level versus the euro since October of last year. But really, that's just because Viktor Orban and my goodness, all the bluster that's coming out of Hungary. I mean, he is basically, attending Munich. He is trying to incite the right-wing parties all throughout Europe ahead of the snap elections in Germany, and his country is benefiting from it, Tom. I mean, so I have to look at Huff.
Now, if I look at the Bloomberg terminal and I bring up Swissy forint, which is CHF-HUF, because so much of the Hungarian housing market is denominated off Swissy, I've got a real rally in Hungarian forint here. There's people driving off I-80 right now on this conversation.
They're like, what are we talking about? I will just add, Swissy is very overvalued in the minds of us FX practitioners, and so from that perspective, I think that's fueling a little bit of the bullishness around the Japanese yen.
Taking notes right now? Sarah Eison's over at the Death Star. She's like, would they just talk about Naki Stocky and keep it going? This is all foreign exchange inside. This is the world of Damian Sassower.
And Jane Foley.
Jane Foley. We're hugely advantaged to have Damian Sassower with us today. Again, Angela Stent here in about 7 minutes. From the Interactive Broker Studios of Bloomberg Business Flash, Lisa Mateo.
And we do have a lift to the markets. More inflation data kind of reduce those odds that the Fed's going to lower rates more than once in 2025. January PPI hotter than expected, up 3.6% year over year. The prior revised up to 3.7%. So we have NASDAQ futures up 0.3%, 67 points. Dow futures up 0.2%. S&P futures up 0.1%. The 2-year yield 4.32%. That's down 3 basis points. And the yield on the 10-year 4.57%. That's down 4 basis points. European stocks climbing. Optimism about a possible end to the Ukraine war. I want to point out the euro. Right now, it's a little changed, but 103.89 against the dollar. The Bloomberg Dollar Spot Index, little changed. Shares of Deere, they're down more than 4%, maintained its outlook during a farming slump, but that just wasn't good enough for investors. Molson Coors, their profit beat expectations. That's giving shares a nice jump up more than 6% this morning. Right. And then Crocs, those things that your kids like, and they put the little gibbets in there, 17%, up 17% this morning. And we have Hertz, though, on the opposite side, they're down 9%. Worse than expected loss of the EV sale plan. Remember, they wanted to sell off all those EVs, especially a lot of the Tesla models. Customers didn't want them, and they were just too expensive to maintain. That is your Bloomberg Business Flash. Damian and Tom.
Are you laughing at my Crocs?
Do you have the gibbets?
I've got my Red Sox Crocs.
Oh, no.
Oh, boy.
They're $44.99. I mean, they were a steal. I mean, I'm sorry. It's a classic clog.
They're comfortable. I would give that.
I got my Ortiz gibbet or whatever it's called in it.
Gibbet, yes.
They're great.
What are the gibbets?
The little things you stick inside the Crocs.
Right, the little five.
You put in, the Yankees suck. It's a really good gibbet. You put it right in there and you walk around. Joining us now from London saying, what did I sign up for? Jane Foley. She's been so good to us over the years, head of foreign exchange strategy at Rabobank. Jane, and actually a really important question for someone at Rabobank with all your commercial transactions. What do reciprocal tariffs mean for the execution of international import and exports?
Well, they could mean an awful lot, and that's why everyone's waiting for the news, which countries are going to be hit by these. But of course, the market, relative to maybe a couple of weeks ago, has sort of changed its impression about these tariffs. Many people now thinking, is Trump really going to put these on, or is this just the first part of his negotiation? Is he looking for something in return? Is he actually wanting those countries to drop their tariffs so that he won't put reciprocal ones on? So it's quite difficult now to know what the outcome of all of these are. And of course, there are so many different countries that the US does trade with. So it's, again, really difficult to try and get a gauge as to, which countries are going to be hit, which sectors are going to be hit. For us at Rabobank, is it going to be, agriculture, to what degree that's going to affect our customers as well? So it's really very complex.
And to me, Damian, that's a key thing, and this is where Jane Foley excels. Agriculture, so it's not aluminium, that's what Jane says, aluminum, whatever. You know what? It's about wheat.
That's right. Well, Jane, you're over in London, and so I have to ask you this. I'm looking at the G10 currencies year to date, and the one that stands out, and the only one that was down, well, now actually Swissy's down year to date, but the British pound. What's going on with pound sterling?
Well, there was, for a very short while, some better news this morning because the Q4 GDP data came out with a very small amount of growth. Now, the Bloomberg survey had suggested nobody had anticipated that there would growth. Everybody thought there'd either be zero or the consensus minus 0.1% on the quarter, which is incidentally also the forecast from the Bank of England last week. So we had better growth. But then, of course, we looked at the breakdown, and what we saw in the breakdown was that there was no growth in the consumer sector. Instead, the growth was coming from government spending, which of course is not optimal. So a better headline, but still an awful lot really for the Chancellor here of the Exchequer to worry about.
Well, Jane, I mean, let's just wrap it up for our audience here. 16 of 21 emerging market currencies are up year to date relative to the dollar. It was 9 of 10, now 8 of 10. Swissy and pound are the two ones that are down versus the dollar year to date. I want you to talk to me about the Indian rupee, the Indonesian rupiah, and the Philippine peso. Those are the three high-yielding Asian currencies, and they're all down year to date. What's going on there?
Well, again, these could be some countries that could be hit by the reciprocal tariffs. A lot of emerging market Asia do place tariffs on some of the US exports. So there is some focus on them right now as to whether or not they're going to be in Trump's sights. But really, I think for the markets, we are more concerned about the impact of the G10. I mean, generally, if we look at the performance of the dollar this year, we had that Trump trade all the way through October, November, up until around about the 13th of January. And since then, well, the dollar has fallen as the market begun to think, maybe Trump's tariffs are this negotiation point. Maybe we've overdone it with this Trump trade, and the dollar's sort of settling back. And that is why I think this news about the tariffs that we might get today or perhaps through the next couple of days is going to be important to really set market expectations. Jane, for how serious is this news?
I'm honored to go from you to Angela Stent. So let me ask you this with all the centuries of ability at Rabobank. Is Russia an EM economy or a frontier economy?
Well, I think I would probably put it as the frontier, but it's certainly a very interesting economy. And certainly from a Rabobank agricultural point of view, we've got to bear in mind that, Russia is producing a lot more food. And actually with global warming, to throw this one in as well, that might be something that can benefit Russia. If some of it heats up, they may be able to produce even wheat.
Jane Foley, thank you so much. Honored to go from you to Angela Stent. Folks, this was my book. This is like one day after the invasion of Ukraine, and I just said in February, I said, this is my book of the year. I don't really care what comes the next 8, 9, 10 months. Angela Stent's definitive Putin's World, Russia Against the West and with the Rest is brilliant on Mr. Putin. We're honored that Angela Stent would join us today, senior fellow at the Brookings Institution. Angela, in the last chapter of your acclaimed book, what kind of engagement with Russia? How should the President of the United States engage with Mr. Putin here in the coming days and weeks?
It's a great question. Glad to be on your show again. What's interesting is that, Mr. Putin, having been in the wilderness in terms of contacts with Western leaders for the past 3 years, now has this offer from President Trump to meet in Saudi Arabia and then probably in Washington and in Moscow. What I find curious about all of this is that if you read the book, The Art of the Deal, right, you don't give away your maximum position before you start negotiating. And so Mr. Hegseth, and echoed by President Trump, have essentially conceded to the Russians most of what they want. So I would think that this would probably be, when they do meet, a rather positive engagement because they're on the same page.
Give us an update on the weight of the past as you begin your book, the weight of the past of President Trump hearkening to tariffs of the 1930s, and the weight of the past of Vladimir Putin hearkening back to Elizabeth, or Catherine rather, or Alexander the Great. I mean, the weight of the past here in these discussions is huge, right?
Yeah, I think that's a terrific point. I mean, obviously, this fascination with tariffs making the U.S. stronger again is also, Mr. Trump's understanding of history. But with Putin, he now sees an opportunity to sit down with the American president, without the Ukrainians, without the Europeans, who are supposed to, once the deal is done, make sure that it's enforced. Sitting down with the American president and essentially agreeing, let's go back, to that nice day in Yalta in February of 1945, when the U.S. and Russia and the Soviet Union at that point essentially divided the world between them, with Great Britain sitting there. This time, in the end, probably China will be let in. But for the moment, that's what Putin wants. That's what he's looking back to. And he may well get that.
Angela, as the part of any deal, there's a word that they might have to freeze the borders here, right? Given where we are. And my question for you is, talk to me about the Kursk region, the region that Ukraine invaded, the region that is currently under Ukraine control. Do you think Putin would ever allow that region to be transferred over to the Ukrainians?
Oh, absolutely not. I mean, the Ukrainians were hoping that if they continue to occupy part of the Kursk region, they could use that as a bargaining leverage to get some of their territory back that Russia is now occupying. I would be very surprised if that was part of the deal. Again, I haven't heard that from any of the American potential negotiators on that.
Angela Stent, you're an expert at what we've witnessed with the present president. I think of the gentleman from Exxon, Mr. Tillerson, exiting stage right at some point. Your observation of the first 25, 26 days of the reign of Marco Rubio at the State Department, is he the Secretary of State, or is he sitting on the Oval Office couch just taking notes?
That's also a good question. I note that Secretary Rubio has changed his position on a number of issues. When he said he was senator now.
Wait a minute, Angela, wait a minute.
Nicely done,
she is the politest guest we have.
That was very nice.
Angela, continue with the diplomacy that the Jurgen Stent household is acclaimed for.
Right. So President Trump named the main people yesterday who are going to be negotiating. He did have Secretary Rubio as part of that group. What's even more curious to me is here's General Kellogg, appointed as the chief negotiator in Munich now with his team, ready to negotiate. President Trump didn't even mention him. So I think this comes back to, if you look at the people who were mentioned, it looks as if Mr. Witkover, right, who not too many of us knew before he apparently got the American teacher Mark Fogel release, that this was the pattern in the first Trump administration. It's often people, very close to President Trump who don't necessarily have official positions, who seem to be doing a lot of the heavy lifting.
Well, this is why we have you on, Angela Stent. Keith Kellogg has earned it. He's actually a throwback, folks, to the kind of military we had in the first weeks of the first Trump administration. What would you expect, Angela Stent, General Kellogg can advise on to the Ukrainians, and particularly Mr. Zelensky, or for that matter, to our European allies who feel left out?
So I think General Kellogg, as I know him and from what I've read, he's much more suspicious and hawkish on Russia than apparently a number of the other people who are going to be involved in this. So I think if I were him, he clearly has to advise the Ukrainians, to be as tough as they can and to try and retain whatever leverage they have. He has, however, said that they should be holding elections soon, which would be very difficult as long as the war goes on. And by the way, even if Trump and Putin meet and negotiations begin, the Russians aren't going to stop that war until they get, what they want. And I think what he would be advising the Europeans is that they remain involved and step up when this war is over, because both President Trump and Mr. Hegseth have made it clear that U.S. troops aren't going to be part of this deal.
Angela, I'm going to ask you a question. We don't have a lot of time for it because I know we could talk about it for hours, but the Caucasus region and Georgia in specific, the Georgia Dream, all of that, Armenia, just talk to us a little bit about what is going on in Ukraine and the spillover effect into some of these nations you're seeing that lie between the Asian steppe and Russia itself.
Yeah, well, in Georgia, you now have a government in power that's much more pro-Russian. And if you look at opinion polls, Georgians said, we don't want to happen to us what happened to Ukraine, and therefore we have to accept the fact that we probably need a government that's more pro-Russian. Armenia is going the other way. It's now distancing itself from Russia, trying to have a closer relationship with the U.S. and with Europe. So there's a lot of turmoil. But obviously the Russian war on Ukraine has made all of these countries sit up and think about how they negotiate their future.
One final question quickly here, Dr. Stent. In this incredibly original meeting of Trump and Putin, what will you listen for?
So I'm going to listen for what they say when they come out. Every other meeting he's had with President Putin, President Trump has praised him. President Putin has also praised Trump, but, less enthusiastically. I'll be listening for that, and I'll be listening to see whether, in fact, these two leaders are going to go on and negotiate something more than an end to the war in Ukraine, but in fact, whether the United States is going to cede to Russia what it wants, which is a restoration of its sphere of influence.
It is a one-volume, 362 pages. I can't say enough about it. Angela Stent, Putin's World, my book of the year, I guess I said 3 years ago. Thank you so much, Dr. Stent. Honored to have you with us here this morning, always with the Brookings Institution. Futures up 9, they lift off PPI. Dow futures up 91. The VIX well under 16. 15.72. With our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, Lisa. President Donald Trump announced that he would introduce reciprocal tariffs, promising to impose tariffs on imports from countries with higher duties on U.S. goods. The move is a major escalation of his trade war with economic partners. The announcement, expected in just under 4 hours, comes ahead of Trump's meeting with Indian Prime Minister Narendra Modi, whose country is expected to be heavily impacted by the reciprocal tariffs. As we've been talking about, President Trump and Russian President Vladimir Putin have agreed to start negotiating an end to the war in Ukraine. We get details with Bloomberg's Bill Ferries.
President Trump announcing that he had this call that wasn't scheduled in advance, publicly at least, that he had this call with Vladimir Putin. He announced it on social media. Of course, there's a lot of European leaders and defense officials gathered in Munich for a security conference. They were all taken very much by surprise. In the past, in these kind of situations, a U.S. president would often reach out to the allies to talk to them, consult with them ahead of a call like that.
Bloomberg's Bill Ferries. Speaking in Brussels today, Defense Secretary Pete Hegseth dismissed the notion that Trump's call amounted to a betrayal, calling him the best negotiator on the planet. However, the European Union is pushing back against Trump's plan to negotiate with Putin over Ukraine's future without the EU or Ukraine at the table. EU Foreign Policy Chief Kaja Kallas says such a plan will not succeed.
Any quick fix is a dirty deal, and it will just simply not work.
Authorities say 28 people have been injured, 2 of them seriously, after a car drove into demonstrators in Munich, Germany. Police said the driver of the vehicle, a 24-year-old Afghan asylum seeker, was arrested. The incident occurred about a mile from where the annual Munich Security Conference is set to open tomorrow. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, Lisa.
Michael, thanks so much. Mohammed Alarian channels the wonderful John authors of Bloomberg here, and John's out with a spectacular note showing the movement in inflation-adjusted yields, the so-called break-evens, and they come in different flavors, 2-year, 5-year, 10-year. I focus on the 10-year, which is more stable, nevertheless elevated. Damian, you mentioned it earlier, but the 2-year break-evens are a moonshot.
Yeah. No, I mean, I definitely have been watching that, but it's really the 5-year break-evens. That's really where I
the
kind of
middle
focus
tendency,
in. Yeah, I mean, just look at where we are, 269 bips, up 30 basis points year-to-date alone. That on the back of a 24 basis point rise back in 2024 last year. So, inflation expectations are on the rise. And what does that mean? Treasury future rolls. Remember, we got to roll our Treasury positions this month, guys. 2s, 5s, and 30s. No wild card. Let's go. Contract to deliver. Sorry, Tom. I got very excited there for a second.
You should see him at Treasury auctions. He goes, He goes nuts. What I would point out with this inflation lift, what we're beginning to percolate from economists is what does it mean for business mood in business investment in America?
Well,
do you make the marginal investment?
I mean, in all seriousness, a Fed on hold means volatility will remain contained here in U.S. Treasuries. But what it also means is that term premia, as opposed to Fed expectations, are what's going to drive the U.S. Treasury yield curve.
Exactly.
So you look at some of the shape of the curve, 2s, 5. I mean, basically, we've been steepening up even though we're flatter on the year. And it looks like, the curve is telling us what we need to hear.
John Arthur's killing it at Bloomberg. I'll try to get that out on Twitter and LinkedIn as well as we wander through the day. Futures up 11. From New York City with Damian Sassower, this is Bloomberg's Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Will the year-over-year change in U.S. PPI exceed 3% in February 2025? At IBKR Forecast Trader, the yes was recently at 39%. What's your take? Trade your prediction at ibkr.com/forecast. All right, we've got futures. Right now, a little bit of lift in the market. This is after another stronger than expected inflation reading. We were just talking about PPI, so there you go. The producer price index rose 0.4% from a month earlier. That was after an upwardly revised 0.5% increase from December. We have NASDAQ futures up 0.3%, 73 points. We have Dow futures and S&P futures both up about 0.2%. The 2-year yield at 4.32%, down 3 basis points. The yield on the 10-year 4.56%, and that's down 5 basis points. To commodities, we have oil falling, Brent crude down more than 1%, $74 a barrel. WTI crude $70 a barrel. We have COMEX gold higher at $2,938 an ounce. The Bloomberg Dollar Spot Index down about 0.5%. We have shares of Barclays. Well, they fell the most in 6 months. The bank left its earning guidance for the next year unchanged. Its shares down about 4% in London. After the close, Airbnb, DraftKings, Coinbase, and Applied Materials. That is your Bloomberg Business Flash. Damian and Tom.
Lisa, thanks so much. 4 minutes to the market opening, and then we'll speak afterwards to Anna Wong as well. Anna Wong with Bloomberg Economics, acclaimed for labor analysis. But when you come out of the combine of the University of Chicago, Price Matters, which is an inflation analysis. I'll cut to the chase, Anna Wong. I got a CPI with a liftish, back to 3-ish. Jason Furman getting ecumenical, annualized. Does PPI correlate the CPI of yesterday?
Well, after mapping all the PPI components today to the core PCE measure, which is the Fed's preferred measure, our estimate for January's core PCE is 0.31%. So that is lower than the core CPI reading of 0.45% yesterday. So yeah, it is actually not perfectly correlated,
right?
Because I think partly the most important component that maps into core PCE, such as hospital prices and physician prices and airfares, those did not increase as sharply as CPI. Hence, the core PCE is not
and
high.
The vice chairman, Richard Clarida, with an essay in the Financial Times, is heated as he reaffirmed a disinflationary tendency, but there was a tinge there of coming from reduced real GDP. Are you modeling out with the storm of price information and tariff rumor and speculation reduced GDP?
Yes, so our team is modeling a storm on that front. So I think the key is, and I think the international division in the Fed learned a lot from the first trade war and found that the most important part of tariffs is the uncertainty, not the actual tariffs themselves, but the uncertainty of not knowing what's next, how long these tariffs will last. That is a contractionary on the GDP.
So Anna, correct me if I'm wrong, please, but, I'm just looking at, the Fed funds rate, 4.5%. I believe you were calling for 3.75 by the end of this year. You might have changed that, which obviously would be below consensus in terms of expectations through the end of this year. Yesterday's report where you talked about this January effect on CPI kind of artificially keeping it a little bit higher. Does today's PPI data kind of convince you otherwise? Is there anything out there that could get you to take your forecast for year-end Fed funds higher?
Yes. So, after yesterday's CPI, I thought that the core PCE reading for January would be higher. So now that our estimate for core PCE is 0.32 for January, I actually thought it was a pleasant surprise. It could have been worse if physician services or hospital costs are higher. But so I have not changed my Fed forecast yet. We're still expecting 75 basis point. And the reason for that is I think that these high residual seasonality that caused the January, and not just January, but also February and March inflation reports to be artificially inflated. What it does is it just push the Fed cuts later in the year, because I don't think they contain a strong signal that inflation is back on the way. It just causes the Fed to delay the rate cuts, which potentially could over tighten the economy.
Okay, and I'm going to stay with this, please. We're going to get to the market opening here. Dr. Wong is with Bloomberg Economics. Damian, I'm looking at the meta chart. Thank you, Romaine Bostic, for wisdom there on Facebook. And I mean, it's a moonshot. It's basically 600 to 725 and very well contained. It's an elegant chart. Yeah. I thought it would be extended, but there's just so much oomph there. It's not extended, is it?
It's amazing how when you flip and you get more in Trump's camp, how the stock market really rewards you for that, right? I mean, look, the reality is the Mag 7's come off and Meta's the one that hasn't. So
yeah, we'll have to see. Damian Sassower with us here, giving huge benefit. Right now, the market opening, Lisa Mateo.
And we shall see it. It opens after a hotter than expected inflation reading right now. S&P 500, that's where we're starting up 0.2%, 12 points at 6,063. We go to the Dow, up 0.2%, 124 points, 44,510. And finally, the NASDAQ kicking in, up 0.2%, 50 points at 19,699. We'll go to the 2-year yield, 4.31%, down 3 basis points. The yield on the 10-year, 4.56%, and that's down 6 basis points. Want to point out Brent crude still down nearly 1%, $74 a barrel. WTI crude, $70 a barrel. And gold higher, $2,937 an ounce for COMEX gold. That's your opening bell report.
Thank you. Appreciate that, Lisa Mateo. We continue with Anna Wong, head of Bloomberg Economics. Anna, people are frazzled. This is back off Heilbronner decades ago, the debt and the deficit. Do your team model a government shutdown or things worse the middle of March?
Government shutdown tends to have a temporary impact on GDP, and then as soon as the government opens up again, GDP recovers. So that part, yes, that part is actually not very significant. However, there would be a very small negative impact from foregone activity. So people who are temporarily not receiving a paycheck would forego going on a trip, and you can't recover that after you start receiving the paycheck. But I would say in the context of the D.C. region, because I live in the D.C., Virginia, Maryland region, people are very jittery about the Doge. And if you go to, various, house opening and in the housing market, the realtors are telling you that, people are feeling more insecure about the jobs, and there's more houses on the market. And generally, a government shutdown in the midst of already a very uncertain people feeling uncertain about job security would be a problem with the spending and consumer sentiment. So I think that the bigger thing really is the Doge impact on government employment.
Well, Tom, Anna is an avid reader of my emerging market fixed income research. And, one thing that I write all the time about is the narrative of U.S. exceptionalism. And Anna, I need to ask you, prior to this year, prior to a Trump administration, that concept of U.S. Exceptionalism had actually been good for emerging markets. It was pulling EM up along with it. But, now I'm not so sure, right? EM resilience in the face of U.S. exceptionalism appears to be fleeting. I'm curious to hear your thoughts on that.
Yeah, I think so. Generally, when the dollar is very strong, global financial conditions tighten, and that's not great for EM. But Damian, you have written a lot also on the debt structure of EMs. I do wonder whether maybe in the past couple of years the debt structure is less reliant, less impacted by tightening global conditions.
Oh, I agree.
She reads Damian Sassower.
She must have read my note on the Ukraine 2035 zero coupons, which are trading at 70 cents on the dollar, Anna Wong. She knows these things.
She doesn't read Tom Keene. She reads Damian Sassower. Dr. Wong, thank you so much. A huge influence across all of American economics, her labor study, and, of course, much more than that on the price changes we've seen here tomorrow. Retail sales. The Dow up 70 points. I'm going to call it there's a solidity to the lift here with SPX up 0.3%. NASDAQ leaps out ahead, up 0.7%. I can't believe I'm doing this. Folks, I'm sorry. It's Facebook. Get over it. Facebook right now pricing out. Oh, it's pulled back. It's cratered here, down 2 points. 722. I have no idea where that will be the end of the year, but we'll keep looking. Thing I've learned today, the number one thing was Jeff deGraaf's call on China bottom.
Oh, yeah. No, I actually thought that was really, really interesting as well. I mean, look, the fact of the matter is last year, we saw at the beginning of the year, a lot of people bulled up on the whole China theme, and it never really played out. But this year, people have been really quiet about it. They don't want to get, railroaded again. And here we are, 9% MSCI China up to the year.
Yeah, so. We'll have to see. We got much more. Joe Mazzola, hugely popular with us. More in the granularity of this equity lift with Schwab. He'll be coming up as well. Damian Sassower and Tom Keene. We're on YouTube. Subscribe to Bloomberg Podcast. Neil Moen over at YouTube says it's the new television. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, tech companies kind of giving stocks a little bit of a boost. We have the NASDAQ up about 0.2%. This is traders kind of looking past hot inflation data. We go to the S&P 500, little change, Dow up about 0.1%. We have the two-year yield for 4.31%, down 4 basis points. The yield on the 10-year, 4.55%. That's down 6 basis points. And the Bloomberg Dollar Spot Index down about 0.1%. We have shares of Cisco Systems up 4%, an upbeat sales forecast the current quarter. Then Reddit on the downside, down 8%. Fourth quarter user growth missed estimates. We go to Robinhood, up 17%. Fourth quarter net revenue topped expectations. Cryptocurrency revenue actually soaring. And AppLovin, their shares up 32% right now. Surge in quarterly trading. Also said it also signed a deal for its mobile gaming division. Leading the gains for the Mag 7 stocks this morning, it is Tesla, up 3%. That is your Bloomberg Business Flash. Damian and Tom.
Thanks so much, Lisa. Greatly appreciate it. This is a joy. And what's so important, folks, about equities and bonds, currencies and commodities is people can have different skill sets wrapped around one given concept. Earlier, we heard from Jeffrey deGraaf at Ren Macro on technical analysis. He's heated when he looks at momentum dynamics, that we are not exuberance, with a different approach in the same topic. Joseph Mazzola joins us now, of course, forever at Schwab. Joe Mazzola, thank you so much. How exuberant are the markets now? Have we reached irrational exuberance?
I think that's a great question. You know, Tom, our studies, what we're looking at right now is basically sentiment indicators, and that's what the Schwab Trading Activity Index looks at. It's behavioral sentiment from what we're seeing from our client base. We got about 35 million accounts that we have a chance to kind of look through and kind of see what they're doing. And we basically take a subset of that and measure their activity. And what we're seeing, we saw a bit of a drop in terms of their behavioral sentiment in January. That's the first time in 4 months. And I think it was interesting because if I were to break up January into kind of sections, right? I think the first half of the month, we saw some pretty bearish sentiment, kind of rolling in turn with what we saw with as interest rates were kind of creeping back up. You started to see markets roll over, and you started to see clients sell out of specific sectors, IT, communication services, and discretionary. But then if you look at the back half of the month, that's when you saw some buying, really kind of a deep seek Monday, if you will, was the day that we saw some renewed interest in some of that dip buying.
You know, I look, Joe, at where we are. We've got a president coming up at 1 p.m. on reciprocal tariffs, rather. Mm-hmm. How do you fold in the cacophony on Washington news into a Liz Ann Saunders kind of duration? Not trading Joe Mazzola 1 week, 1 month, what do we see? But how do you take this political maelstrom out further?
Well, you know, that's difficult because I think, you know, if I were to ask Liz Ann, you know, what's going to happen in the next 3 to 6 months, we don't know. I think that's the answer. But what I do think you need to do is you kind of do a little bit of a sector analysis, and I can speak to kind of the behavior that we're seeing from our clients.
Please.
And even the sentiment. So not only do we look at a behavioral study, but we ask them what they're thinking of. And the trader sentiment survey that we issued to our clients, they told us this is something that's front and center at the foremost of kind of what they're looking at for their investment decisions, which is interesting because, you know, even though it seems like they might be able to kind of look past the noise in some of their investment selections, it's still something that is concerning for them. And what we heard from them, and I thought this was very interesting, is that, you know, not only are we seeing a downtick in some of their bullishness, but you know, a lot of them are actually using some of the tariff and trade policy announcements as a way for them to kind of set up their trades. Maybe not necessarily their investments, maybe not the investors, but our traders are definitely using some of that noise as a way to kind of set up what they're doing over the next 1 to 2 months.
Joe Mazzola, head of trading and derivative strategy at Charles Schwab. Thank you. Thank you for joining us here today. Thank you for sharing your thoughts with us. But more importantly, thank you for convincing the powers that be to expand 24-hour trading to all retail clients of Charles Schwab.
Not just me, guys. Not just me.
I get up very early in the morning. I cover emerging markets here, and I'm a Charles Schwab client. Okay. And my goodness, this is going to be fun.
I'm thrilled you brought this up. Joe Mazzola, it's going to change the world, isn't it?
I think it's important for a couple things. And so, you know, as a former floor trader myself, when we would get upstairs after trading in Chicago and we'd wait for the earnings announcements and you get back to your desk and, you know, you're trading the stock after the earnings announcement, that's huge. You know, the markets move. They absolutely move. whether it's earnings announcements, whether it's different trade and tariff policy announcements that happen over the weekend. I mean, these are things that can move markets in a 24-hour period. And I think providing that liquidity, providing that access is important to our clients.
Okay, well, Michael Barr's waiting to get in here, but this is too important. Damian Sassower, I'm interviewing you right now with Joe Mazzola. Who's fighting against 24/7 trading like what we have in BitDog?
Research analysts who basically have to cover these stocks and don't want to get up and work 24 hours a day and try to rebalance all their models to figure out where the signaling comes from.
Joe Mazzola, who else is fighting against 24/7 trading so John Tucker's kids can day trade Facebook and Meta on a Sunday afternoon?
Yeah, I don't know who's fighting against it, but I'll tell you who wants it, and that's the retail clients. And especially international clients, they want access to the U.S. market.
Exactly.
They don't want to have to, trade at midnight. So that's where I think you're going to see a lot of an uptick in terms of that volume as international.
I'm begging. We need Joe Mazzola, Liz Ann Saunders together in the studio to talk just about this topic. I would love to know, the two of you, with all your experience, what you mean there. Damian, thank you so much for bringing that up. That was my fault that I didn't.
Thank you, Joe.
Do that. Joe Mazzola, thank you so much. With Schwab, head of trading, derivative strategy. He works 24/7. Speaking of working 24/7, with our news in New York City, Michael Barr.
Thank you very much, Tom. President Donald Trump says he'll announce reciprocal tariffs in just over 3 hours. Trump says he is promising to deliver on his threat to slap tariffs on imports from countries that impose higher duties on U.S. goods. He wrote on his Truth Social platform, "Today is the big one. Reciprocal tariffs make America great again." The European Union is pushing back against President Trump's plan to negotiate with Vladimir Putin over Ukraine's future without the EU or Ukraine at the table. EU Foreign Policy Chief Kaja Kallas says such a plan will not succeed and says the EU stands with Ukraine.
If Ukraine decides to resist, Europe will back Ukraine, yes, with 20% less if US decides to withdraw, but Ukraine will defend the principles of sovereignty, territorial integrity, and the principles that also Europe stands for, and we are there together.
The EU's Kaja Kallas went on to say any quick fix is a dirty deal. About 75,000 federal employees signed up for a voluntary resignation program inspired by President Donald Trump's billionaire efficiency czar, Elon Musk. However, that falls short of the numbers the White House hoped for and increasing the likelihood of deeper mass firings. It makes up about 3% of the 2.4 million civilian federal workforce. The goal was at 5 to 10%. Musk, speaking by video call at the annual World Government Summit in the United Arab Emirates, is standing by his decision to cut and limit federal agencies.
There's roughly 450 federal agencies of one kind or another. That's more agencies. That's almost an average of 2 agencies per year since the formation of the United States. So, I mean, how many agencies do you really need to run a country? 99? Not 450, that's for sure.
The resignation program, known as Fork in the Road, closed after a federal judge lifted his order freezing the program. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, and soon John.
Thank you. Greatly appreciate it, Michael Barr. Damian Sassower get a huge response on YouTube live chat on 24/7.
Yeah.
I mean, the spreads are there. It's not as efficient. We all know that, but what do you think?
Do you have a brokerage account at Charles Schwab? Have you ever played around with it?
I'm not allowed to say.
I mean, I confess that I do, and I think it is awesome. I think it is such a great app. It is so easy to use, and honestly, like on the pricing there, I'm not going to say anything bad about the Bloomberg terminal, but it's pretty solid. It's pretty timely. So yeah, I mean, of course, make it available to everybody all hours of the night.
It's a fascinating question.
Sports gambling fan.
You bring it up. I'd never bring it up, but folks, I got a handshake agreement with Matthew Winkler about what I can do, and I can't trade.
No, I'm not allowed to trade either.
I'm not allowed to trade at all.
I don't trade. I invest for the long term.
He said, you want to buy, you can buy, but you cannot buy and sell. I have not made a trade. Are you ready?
Let me hear.
In 24 years.
Get out of here.
No?
Well, I guess that's why you're still sitting here.
It was a foundational thing. He sat me down. I can't own any financials, folks. I can own Vet Bill, the trust fund the dogs have. They've got some banks in there, but I don't.
A little structuring, a little offshore structuring.
Really strict rules around here.
If you, I mean, look, you can own stocks. You just have to own it in a trust offshore. I'm sorry.
But I can bet on the Detroit Lions, so that makes it worthwhile. The Dow up 33 points here. The VIX 15.74.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Damian Sassower in for Paul Sweeney. This is a treat. We rarely do this. I think the last time we did this was at the King's coronation in England to have a guest on 2 days in a row, pre-planned. Robert Schiffman has been on fire at Bloomberg Intelligence, and tomorrow we're going to devote a very long block with Schiffman on Mag 7 and their effortless ability to issue debt to pay for all this CapEx. I'm going to ask one question here, Robert Schiffman, before we get to what matters. And this is, you've just released moments ago a chart, this happens to be on Amazon, which shows cash from operations, what they're going to spend on all this idiot AI stuff, and the free cash flow keeps growing. Is that what you predict?
Well, I had to check my watch before I came up here. Make sure it was the end of earnings season. And that's why you got the debt guy up there. All our equity guys must be on vacation already, huh?
They are. It's a hybrid.
But still,
hybrid.
Always happy to be here. Yeah, listen, we've been telling you the same story for the last couple of years. Tech credit, has never been better in its entire history. And we only see it keeping getting better. And I don't care how much money they're going to spend. They're going to make more than they're spending.
Data centers. We're going to come in on this tomorrow. Robert Schiffman, his people say he can join us tomorrow. And I really want to do an extended discussion. I can't say how important his research is right now at Bloomberg Intelligence. It's almost as important as salvaging Damian Sassower's golf career. You guys are going to a golf simulator here?
It's a work collaboration meeting.
It's a collab,
I think. And maybe next week, Tom, we're going to sim a bit in Scarsdale at a place that Rob is close to and he knows about. And he invited me, and we're going to.
I just wanted Damian in a comfortable situation where he can talk to me about the impact of the value of the dollar on U.S. credit.
So you're really going to get his dollar call as he tries to heal his golf swing.
And I need to know how the Mag 7, how their leverage is really affecting the broader EM dollar credit universe, Tom. And we're going to talk about these and many more things.
Whose swing needs a greater repair?
Well, I think the more difficult thing is trying to get $1 out of Damian's pocket to pay for the simulator. That might be the biggest challenge of valuation. Damian's swing is definitely smoother than mine.
He's got more balance, though.
But I have more power. At work I cover AA's and AAA's, so I don't really have to go for the fences. But when we're on the golf course, I swing as hard as humanly possible.
He's got a lower base, and that helps because he's shorter than I am, right? Like I'm a little lankier, I'm a little taller, I get a lot more flexibility going. He's more of a, he can really compact.
I'm afraid to ask, with the year you've had, I look at Wall Street bonuses. Damian, are you getting all new clubs this year?
No new clubs. I don't need any more problems, no more headaches. I've tried that in the past. Maybe a new putter though. I do need to work on my putting.
How long do you two spend in the golf simulator simulating? It's like 20 minutes?
Listen, there's no amount of time that is too long for us to collaborate and add incremental value in the credit market. So if that's 2 hours, that's 2 hours. If it's a half a day, it's a half a day. It's going to be whatever it takes.
Okay.
You hear what he's saying here?
Can you come back? Seriously, your work is brilliant here. Can you come back tomorrow? Global Wall Street, I just set your calendars. Robert Schiffman tomorrow on all of his CapEx. And the ease of which Mag 7 can raise debt, or Mag 4, whatever
Build data centers.
As long as I don't have to talk about Formula One or European football, I'm happy to be here.
Yeah, we're golden. We can do that.
We can talk about Uruguay.
Yeah, I can't pronounce that. We will not do Formula One. That's 4 or 5 weeks away. And we're not going to do English football tomorrow because we killed it with Jersey this week. It's too much. Robert Schiffman, thank you so much. Congratulations on 2 incredible efforts out at Bloomberg Intelligence. That'll be a highlight for us. Tomorrow, you'll be with us Friday as well, the California Girls.